आवाज आई, गुड इवनिंग आईसीआई दुबई. अब लग रहा है कुछ आया. Finally the time has come today and the time is now. The time to invest. Invest in ourselves. Invest in educating ourselves. Invest in upgrading ourselves. Invest in learning from the renowned speakers and learn the art, science, and commerce of investing in equity, funds, bonds, or startups. Everyone has a different taste. Someone likes samosa, someone likes dhokla, someone likes salad, someone likes fafda. Same way is the appetite for investment. In this room, we all sit with different appetite for investment. Someone likes low risk, less return, but safe investment. Someone relishes medium risk, and for someone, high risk gives them the kick. But one thing is common among all of us. Risk hai to ishq hai. Meaning, where there is risk, there is love to seek. So let's invest the time, let's seek love, and let's learn how we can ishq with the risk. Welcome to all the dignitaries, our chief guest, Mr. Siddharth Balachandran, our guest speaker, CA Motilal Ji Oswal, our elite speakers of the day, Mr. Rami, Mr. Apruva, and Mr. Gautam. My heroes, my past chairman, Regional Director of Middle East and Africa, CA Prabdeep Singh Baweja, and all my seniors and fellow members. Welcome to one more event of ICI Dubai. From bull runs to business ventures, diving into Indian stocks and startups. The aim, vision, and objective of every member sitting in this room is to learn on how to earn that extra from investment. Where to invest, how to choose, and how safe it is. And here we are with the buffet of different investment opportunities. Be it equity investment with the dream of reaching financial freedom, be it pension investment to secure that old age and laugh with old friends without worrying for money, or be it startup investment to live the dream of Shark Tank. We have eminent speakers from all these areas to help us understand and decide where we want to put our money. Before we move further into the session, it's time to pay respect. Respect to the country which is giving us the opportunity to earn better, live better, and cherish life. The country which came out of AML grey list yesterday and sent waves of happiness across UAE, our UAE. We also need to pay respect to the country which is being looked up by the world. The mention of it makes you and me happy. Knowingly, unknowingly, spread smile on our faces because my India is changing, our India is growing, your and mine India is shining. And we also need to pay respect to the institute, which is now the largest accounting body across the globe. The one with legacy of 75 years, our ICAI. It's time for national anthem of UAE and India, followed by ICI motto. I will request everyone to raise from the seats for national anthem and ICI motto, please.
अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you all. Please take your seats. We'll give a couple of minutes, seconds for everyone to settle down. The ones who waited for national anthem to end. Always respect when you stand and wait for that. Today is a special day for all of us. Today is our first event after we won Best Overseas Chapter for 11th time in a row. 11th time continuously, a landmark to cherish. Winning 11th time continuously is not sheer luck. It's the hard work. It's the discipline. It's the determination of one and all. It's not the award of the managing committee. It's your award. Please give a thundering round of applause for yourself because it's award of every member, present and past. It's award for all the past chairmen, past committee members, our sponsors, and each one of you. इतनी तो तालियां बजाइए अपने लिए क्योंकि 11th time in a row you are getting this award from ICI India. With these words, let me invite our proud chairman, the man who led the way from the front for this award for the 11th time. Our chairman, CA Hari Kishan Rankawat, on the stage for his chairman's address and also share with us the calendar ahead. Give a round of applause to our chairman, CA Hari Kishan Rankawat.
Our chief guest and speaker, Mr. Siddharth Balachandran, speakers of the day, CA Motilal Joswal, Mr. Rami Musa, Mr. Apurva Vora, and Mr. Gautam Shah. Galaxy of our former chairman, Vice Chairman CA Rajesh Somani, guest, sponsors, my colleagues in the managing committee, and respected members of the chapter. A very good evening to all of you. First of all, I would like to welcome each one of you to our event today, Bull Runs to Business Ventures. So today we are going to dive into Indian stocks and startups as well. First of all, I think Jayaprakash Agarwal has already shared that we have got the best or the first Best Overseas Chapter Award from ICI India. And that certificates actually were handed over by our Honorable Speaker of the Lok Sabha, Omji Birla, and our newly elected President, Ranjit Kumar Agarwal. And I congratulate actually and thank the entire EXCOM for putting in all the efforts in order to get this Best Overseas Chapter Award. So can we have a big round of applause for the entire EXCOM? And at this juncture, I would also like to thank our founding chairman, CA Rusi Patel, who has set up the ICI Dubai chapter in the year 1982. And I would also like to thank all our former chairmen and managing committees of the ICI Dubai chapter for their guidance and support. So we have won this prestigious award by grace of God and blessings of my parents as well, and wholehearted support of my wife, Dhruv Sri Rankawat. And I am equally grateful and thankful to all the spouses of my entire EXCOM, because there is a lot of efforts in the back which we don't see, but they are really supporting us. So can we have a big round of applause for all the spouses of the entire EXCOM? And a special thank to each one of you for your active participation, because this award or this chapter wouldn't have been possible if your active participation is not there. So can we have a big round of applause for each one of you? Ladies and gentlemen, let's continue to grow and succeed together. Friends, you guys are aware the Sensex, which started in the year 1979 with a base of 100, and today it is 73,000. So you guys have seen the compounded growth in the last 44 years, which is remarkable, and it's a testament to the potential and resilience of the Indian economy. Moreover, the stock market has not only expanded its size, but it has also become more inclusive. The market's increasing accessibility, thanks to the technological advancements, which has empowered a broad segment of our population to participate in the financial market. As a result, the number of retail investors has grown significantly, contributing to the market's vibrancy. So in a way, each one of you are the investor, as well as you are a kind of mini startup and a success story of each of the listed as well as unlisted companies in India. So today, Motilal ji is going to speak on the Indian stock market, which is primarily listed companies, and then Mr. Apurva, he is going to talk on unlisted companies, which is a startup. I believe actually that the impact of chartered accountants on the Indian stock market is profound and undeniable, which is evident as CA Motilal ji and his co-founder Ramdev ji Agarwal. They are from our own CA fraternity and the founders of one of the most vibrant, well-diversified financial services in our country. A lot of our CA friends are working in very senior positions in the financial institutions as well as regulatory authorities, and they have played a pivotal role in shaping the market's integrity. So our CAs are doing great in the space of startups as well. Our PM Modi ji has given that quotation, if you look at it, Atmanirbhar Bharat. So nowadays, if you look at today's youth, they are looking at the startup, not at the job. When in our time we were always looking for a job, but now everybody is looking for a startup, which is something great to watch for. And this is the change actually, which is driving India to the third largest ecosystem of the world for startups, with over 112,718 startups across 763 districts of our country as of 3rd October 2023. So there is an opportunity for investment in the startup landscape, and that's why our learned speaker, Mr. Apurva, is here to share his expert views into startup landscape. Friends, on 18th Feb, we have participated in Diabetes Walk organized by Landmark Group. And our EXCOM member, CA Sanjay Gagrani, our treasurer, CA Rishi Chawla, they were working, and along with our one of the subcommittee member, CA Amit Khaitan, they have all actually worked day and night with the Landmark in order to have this Diabetes Walk, which was a successful event. So I thank each one of you, and can we have a big round of applause for all of them? On the same day, 18 Feb, our ExCom member CA Sanjay Gagrani has organized a full day workshop on the fraud detection as well as forensic audit. And it was actually, I think the speakers were CA Chetan Dalal, which has delivered a great workshop. Actually, that day I was also there in the last 2 hours, and it was well received by all the members. Can we have a big round of applause for our ExCom member, CA Sanjay Gagrani? Ladies and gentlemen, now let me share with you a few of our forthcoming events. On 1st March, we are going to organize an event on UAE corporate tax, transfer pricing, and corporate tax litigation at Millennium Plaza downtown. On 2nd March, we will have our bowling event, which has not taken place till now, so we are going to organize on 2nd March, Saturday, at Dubai Bowling Center for the entire day. And the last event under my chairmanship will be happening on 9th March, International Women's Day, at Intercontinental Dubai Festival City, and it is actually we are going to organize in partnership with Khalij Times. So I look forward your participation in that event with your spouse. During our Indian stock market event on 21st of October, we got to know QGLP, Investment Framework, Quality, Growth, Longevity, and Favorable Price from Ramdevji Agrawal, co-founder of Motilal Oswal. And Motilal Oswal's investment philosophy, buy right and sit tight. So friends, people are talking about forthcoming decade of India, but I tell you that this is not about the decade of India. The entire century belongs to India. India will succeed not only for India, but also for the whole world. Motilalji's topic is Bharat, Sone Ki Chidiya, will be worth listening, and I'm sure that India will become a golden bird as well as world guru, Vishwa Guru as we call in the past time. So it is going to happen. And at the end, I would like to thank all our speakers and panelists to take the time out of their busy schedule to address our members. Can we have a big round of applause for all of them? Namaskar, Jai Hind, and Jai ICI.
Thank you, Chairman C. Harikishan Rankawat, for sharing the calendar ahead with all of us. It's time to move ahead on the session and invite our chief guest of the day, Mr. Siddharth Balachandran. Excellence is something which everyone wants to achieve. It's the destination where everyone wants to reach. But our chief guest thinks differently. He says, excellence is not a destination. For him, excellence is a journey with milestones. What a thought, sir. The man par excellence, our chief guest of the day, Mr. Siddharth Balachandran. Every time I hear him, I take home some new learning, and today again, I get this opportunity to hear him and learn something new. Before I invite him on the stage, I will request our Vice Chairman, CA Rajeshji Somani, to introduce the speaker to all of us. Can I have a round of applause to our Vice Chairman, CA Rajeshji Somani?
A very good evening to all of you. Distinguished guests and speakers, our charming chairman Harikishanji Rakawat, in his leadership, our chapter has received the best chapter, overseas chapter of the ICII India, and as you know, this is the 11th year in the row our chapter has been recognized the best chapter. Please give big rounds of applause for yourself. My other ExCom colleague, ladies and gentlemen, I am fortunate and privileged to introduce one of the very versatile and the youngest personality who has not made achievement in the professional life, but have also earned various laurels in the social life. I'm talking about Mr. Siddharth Balchandran. He is the Executive Chairman and CEO of Burgeoning Corporation Limited, an investment holding company having its headquarters in DIFC, Dubai, and managing about $1 billion fund. He has an approval of FEI by SEBI India also. He has a more than 20 years experience, an NRI businessman, investor, and active social well-doers. He is associated with various social organizations in UAE as well as in India. He is supporting various suffering families from the unemployment, well connected with the Indian consulate, available at midnight for the help of the NRIs or expatriate. He was Vice Chairman of India Club in 2006 and is Chairman in 2010. He was one of the youngest chairmen of the India Club in his history. He is again current chairman in his second term of the India Club. He is currently also chairman of the club in his second term, but he is also a patron governor of the Indian Social and Cultural Center, Abu Dhabi. He is also director of Chinmayanand International Residential School in Coimbatore, Tamil Nadu. He is a recipient of the Pravasi Bharatiya Samman Award 2013 from the President of India, Srimati Draupadi Murmu. Again, he is among the youngest Pravasi Bharatiya Samman Award so far in the history of the award function in India. Ladies and gentlemen, please welcome Mr. Siddharth Balchandran. Welcome. Thank you.
Thank you. It never ceases to amaze me how different it is when I hear things about myself, because I seriously believe it's not true. So it's very funny for me to hear such glowing praises about myself. Long way to go. Honorable Chairman of the ICAI Dubai Chapter, Shri Harikishan Rankawat, honorable members of the committee, eminent speakers who are here today, my brothers and sisters of the CA fraternity community in UAE and beyond. You know, the beauty about being Indian is I have been a Keralite in Kerala, amongst Keralites. I've been a Tamilian amongst Tamilians and in Tamil Nadu. I've even been a Bengali in Bengal. I've been a Punjabi in Punjab. And no, before you jump to conclusions, I'm not a CA amongst you exemplary CAs. So I don't think the magic of my country is that intense that it'll give me that much of an accomplishment as you guys. So no. But I would like to start my address. And I always do that. I believe in a positive start. So I always like to start with thanks, gratitude, commendations. So bear with me while I do that. It is such an honor and a privilege for me to be amongst such exemplary and stellar individuals such as yourselves. I come here, I stand here before you to get inspired. I don't come here to inspire. So thank you for all the vibes that I'm getting of inspiration, because this is going to stand me in good stead in the future. So thank you very much. The last time I was given this honor to be part of an event organized by the ICAI. I remember saying that a group of CAs sitting together, congregating, is a sign of good times. A group of CAs congregating and who are smiling, it's a sign of great times. And today, I see the energy and the applause and the smiles are wider. So I think the world's Amrit Kal is well and truly underway. So congratulations to your profession, to yourselves for being such great benchmarks of success and sustained success and excellence. So if I may solicit a round of applause for all of you. One thing that strikes me about the ICAI, I don't know whether ICAI at large or this is only specific to the ICAI, the Dubai chapter, is the strict adherence to the ideals of democracy. Your yearly changing of leadership roles with due emphasis on succession planning is truly astounding in its conceptualization and even more awe-inspiring in its seamless execution. It is not common. It is very rare that this happens. So congratulations to you for believing in the true ideals of the biggest ideal of all, democracy. Now, when I say the word democracy, it brings me back to my favorite topic, my soul, my identity, my mother, India. You know, I would like to narrate an incident that I was part of. This was during the World Government Summit in 2022. So I was part of a panel where there were 3 other speakers, and it was being moderated by a very eminent journalist from UK, I think. And it was, so the talk or the discussion was about India's impact on the world economy. And remember that the world had just gotten out of COVID. And the very accomplished moderator was speaking in superlatives about India, about our country. And often a refrain was that India has finally done this. India has finally reached that. So when it was my turn to speak, and I was the first to speak, I quickly remarked that I'm not so sure that India has been asleep or awake, but the world has been definitely asleep. And I'm so happy that the world has finally woken up and has realized that they are tremendously remiss in underestimating our country. So I think that set off the tone for a very intense and enlightening discussion. But isn't it? Haven't we always been ready? Probably one of our biggest virtues, and maybe faults, is our patience. So I would like to put it, when anybody says that we have finally woken up, I would like to put it in a different way. I would like to say that we were merely waiting for the world to wake up. And we were making ourselves ready. It's not easy, right? You're talking about 140 crores of people, they say 1 in 9 or 10 in the world is an Indian or of Indian origin. Imagine the power that is unleashed by that sort of number across the world. So yes, I have to admit that there has been an evolution. It is not that it is not that the world was unaware of us. We also had to improve, and we are still improving. We will continue to improve. Like he said, excellence is a never-ending journey with no destination, only milestones. Now, you must have known, all of you, especially the NRIs outside India, who probably have a better view of how the world views India. There was a time when we used to talk India up. Patriotism is in our blood. But somewhere in our heart of hearts, I'm talking about 20, 25 years back, we would have probably felt the tinge of sadness that, yeah, we are good talkers, we convince people, but maybe there is truth in the remarks, the negative remarks that the world at large say. But today, my head is held high, and it remains high. When anybody, and nobody dare talk negative or anything about India, because then that would mean their livelihood is gone. But I have been craving for this for a very long time. And I'm sure this feeling is mirrored in each and every one of you sitting here. We have been waiting for this situation where people are talking about India being the third power in the world. Take, for instance, our GDP. We had a vision of 5 trillion USD by 2030. 1 month back, we have revised that. We are going to hit 5 trillion probably in 2027. 3 years have been shaved off the target. So imagine. So this is getting compounded. This is the speed at which we are walking. Is turning into a brace, and slowly but surely we will turn into a jog. We may never run because we have not been known for that. We'd like to conserve our stamina. We are that sort of people as a population, as a nation. Slow and steady. Slow has gone off, steady is still there. So if you're talking about such an enhancement in the speed of growth, imagine the percolation down to its citizens. So when you talk about a per capita of 2,500 becoming 3,000, it's not only $500. The effect is multiple, across sectors, across demography, and dare I say, across borders. Take, for example, a theme that probably resonates with the subject today. Our financial markets, the stock exchanges. In 2010, there were 1.8 crore people who were actually registered as investors. I think the population at that time was probably 125 to 130 crore. Today, it is a staggering 16 crore people who are registered as investors on credible, straightforward platforms to invest in a credible, straightforward way. And here again, it's not just a play on population. It is a possibility, the possibilities of each and every one of those investors, those 16 crore investors, what they can do for the country by investing not in anything else, but in a straightforward, focused manner on a regulated exchange. Which brings me to my next part, regulation. You know, people used to complain about regulation. But I think slowly people are understanding that regulation is the heartbeat of democracy. Without regulation, there is no credibility. So he was talking about the UAE coming off the FATF grey list. It is because of regulation. So all of us now understand that we have to welcome regulation, not get scared of it or run away from it. Because we are running away from success and sustained success. So you have SEBI, which I think is world class, probably on a par or better than SEC. We have a great firm like the Enforcement Directorate, which keeps everybody honest. Because that is the key, that is the cornerstone of sustained success and excellence. Without these at the background, you cannot succeed. So I think the populace at large has understood that. And I see a lot of smiling faces when I say regulation because now, why has this happened? Why has this evolution happened? What are the reasons? I mean, there are a host of reasons one can say, but I'd like to pinpoint two. One internal, intra-country, and one external. So the internal is, I think there was, over the years, I mean, especially since our independence, the 50s and the 60s and the 70s, every government that has come has always been well-intentioned, thankfully. We have been blessed. There has been no government that has come with a bad intention, unlike a lot of other countries that I will not speak of. The bureaucracy has always been strong. However, I think the connect was missing. So now, in the last 15 years, I sense an extreme empowerment of the bureaucracy. And this is increasing by the day. So what does this translate into? Revising GDP targets from 2030 to 2027. This is the speed. The speed at which the policies are implemented is solely because of the bureaucracy. And when a bureaucracy, that is the middle layer, is empowered, the speed becomes manifold, unimaginable. So hence, people are talking about India being number 3 in 2040, third only behind China and America. People are talking about 2047, number 2. And I'm sure these are all figures that are calculated on the limitations of our mind. So I'm sure compounding is an infinite concept. It is just a percentage here and there, where we may even be the highest GDP country soon enough, without any date. So these are things, I think, which has been brought about by that empowerment. Now I say empowerment is just one word. Of course, it has taken decades for us to reach here. And I dare say, irrespective of which government comes in the future, I think this is here to stay. Because if this feeling of empowerment goes, then it'll take a long time for this to go, number one. And if it goes, then disaster will strike immediately, because it will be very palpable. The second thing, which is an external factor, is, I use this term very comically, because it is an extension of a relationship. So I use the word conscious decoupling. So I think the world, specifically the West, is showing a conscious decoupling from China. China has been a huge success story. We have to admit that, irrespective of our relationship. Now, the West has realized that it is time, if not it's late, that they develop and they slowly move away from China as the supply chain. And I'm not talking about politics, I'm not talking about strategy, I'm merely talking about technicalities. So China was known as the supply chain of the world. Now, when relationship changes happen, obviously you look at the next best option. So I can just imagine the leaders of the relevant countries in the West thinking, okay, so we need a 1 billion plus population with an advantageous age pattern and who have a good work ethic. I wonder where we will go. There is only one answer, and that is our country. And here, when they start experiencing what it is, the earlier waking up to India that I was referring to, when they experience India, they will never go back. Because we have something that is far, far more than any other country with the same population size or even ability. We have credibility. And credibility comes, again, only from democracy. So you have this virtuous cycle that has set in. And the speed, mark my words, is only increasing. So all these enhancements of the Sensex, of each specific company that is traded on the exchanges, all the enhancement that you're seeing is not a market-driven thing. India is one of the few countries that have GDP to market capitalization of the exchanges at 100% thereabouts, which means the growth is real. America is 150%. Not that real. But then that's how they thrive. For us, we need something fundamentally strong, and this is the proof of the fact that every company that has risen in share price in the recent past or in the last 5 years has been backed by quality earnings. There is no doubt about that. So when the speakers start speaking about the stock exchange, they themselves will explain to you in a better way because they are the experts. But I'm just giving you a sort of a broad explanation as to why we are here and why the road is going to be rosier. However, now let me caution you. The intensity of every initiative that any country's government launches is limited to the clarity of purpose of the citizens and the people. Only then will it be successful. So it is up to us. And I would like to gently reinforce the fact, and I'm sure all of you know about this, we are a force for good in this world. We are a force for good in this world. And it does not make our job easier. It does not make our lives easier. On the contrary, it's going to be tougher. It takes intense hard work and extreme resolve. But that is the challenge, that is the thrill, that is the exhilaration of being part of our country. Now, if we want to be part of the most credible, most transparent, and the nicest country in the world. It's time we worked harder than our government. Very simple. It's very easy for us to say, let the government do. No, no. We have to do it. Then maybe the government can take it on in the event that they're not working. Thankfully, we have had governments that work probably harder than us. So I would like to reinforce, we are a force for good in this world. And before I conclude, I would like to invoke the higher power. God bless the UAE. God bless India. God bless all of you. Thank you so much.
From slow and steady to steady and always ready. That is my India, that is your India, that is our India. Give a round of applause for Mr. Siddharth Balachandran for his words of wisdom. And we feel truly blessed to have you, sir, among us. Can I request Chairman and Vice Chairman to join me to share a token of love on behalf of all of us with Mr. Siddharth Balachandran. Sir, India is growing, and truly, because of leaders like you, because of the thought process like you, that is why India is growing. Thank you for joining us here. Moving on to the next session, and the next topic is very, very interesting. When I read the topic, I could not stop writing these lines. These lines will be in Hindi, but I will try to explain in English as well. The topic of the session is, by Sri Motilal Ji Oswal, is Bharat Sone Ki Chidiya. And on this, what I have written is, this goes like this. Bharat pehle sone ki chidiya kehlaya. Bharat pehle sone ki chidiya kehlaya. Sone ki chidiya is nothing but golden bird. Ghosla is nest. So line goes like this. Bharat pehle sone ki chidiya kehlaya. बीच में हमारा घोंसला भी डगमगाया. बीच में हमारा घोंसला भी डगमगाया. हमारे स्वर्ण पंखों को नोचा. स्वर्ण पंख means golden wings. हमारे स्वर्ण पंखों को नोचा. अपने पंजे से हमारा पंजा दबाया. हमारे स्वर्ण पंखों को नोचा. अपने पंजे से हमारा पंजा दबाया. पर हौसला हमारा था बुलंद. पर हौसला हमारा था बुलंद. फिर हमने अपने पंखों को फैलाया. उड़ान भरी, गगन चूमा. चांद तक हो आए हम. आज फिर सोने की चिड़िया कहलाए हम. आज फिर सोने की चिड़िया कहलाए हम. With these words, let me invite the guest speaker himself, who needs no introduction. But it's our collective responsibility to introduce him. And for that, let me invite our Treasurer, Sri Rishi Chawla, on the stage. Give a round of applause for our Treasurer, Sri Rishi Chawla, for introducing Motilal Ji Oswal to us.
Thank you, Secretary Saab Jayaprakash. I wish I can be a poet like you. Beautiful. Dear members, Chairman, Chief Guest of the Day, Siddharth Ji, Keynote Speaker of the Day, CA Motilal Oswal Ji, distinguished speakers of the day, ladies and gentlemen, a very good evening to all of you. Can I have raise of hands? How many of us have heard the word Bharat Sone Ki Chidiya? Since our childhood days, I remember I've always heard this word Bharat Sone Ki Chidiya. And then came these intruders who took a lot of resources and things out of the country. But the fundamentals of India has never come down. Friends, we are at that juncture of our life to witness India growing with leaps and bounds, year after year, month after month, hour after hour, second after second. To talk about this very engaging aspect, who can be a better speaker than we have CA Motilal Ji Oswal with us? It gives me a great honor and privilege to introduce him. So I'll just talk about few of his achievements, though the list is very long, but let me share some of his achievements. He's a chartered accountant and started Motilal Oswal Financial Services Limited with co-founder Ramdeo Agarwal ji in 1987. Under their leadership, the company has grown from a small sub-brokerage with zero capital to India's leading financial services company with market capitalization of over 25,000 crores. The business is diversified into 7 business models and employs over 10,000 people and catering to over 60 lakh customers across 600 cities. A remarkable part of the company is that Motilal Oswal Services Company is taught as part of a case study in Harvard Business School, USA, which is a great thing. Congratulations, sir. Motilal Oswal ji has authored 3 books on quotation and motivational stories, naming The Essence of Business and Management, The Essence of Life, Tales of Wisdom, and he has given a lot of insightful articles in magazines and newspapers. Government of India has awarded him Rashtriya Samman Patra for highest taxpayer for 5 years. This is a great thing, highest taxpayer for 5 years for our chartered accountants to do with so many, big names in India. Great, great thing, sir. Salute to you. He's awarded Excellence Business Achiever by Institute of Chartered Accountants of India. Our own institute has awarded him as the Excellent Business Achiever. He has got Lifetime Achievement Award by Lions Club International and Jain Chartered Accountants Federation. He is awarded Rajasthan Ratna Lifetime Achievement Award by Manav Seva Trust. Something really stands out, is that along with his co-founder, Shri Ramdeo Agarwal ji, they have dedicated 10% of Motilal Oswal equity to charity of level, and they have contributed over around 2,500 crores in the last 10 years. So big round of applause for that. Earning money is one thing, but giving out and for a charity purpose need a big heart. So, sir, very impressed indeed. And he has been awarded Samaj Ratna Award from Her Excellency President Srimati Pratabai Patel in Rashtrapati Bhavan long time back. There is so much to talk about him, but I'm sure you are waiting to hear from the man himself. So ladies and gentlemen, can I have a big round of applause to welcome CA Motilal Oswal ji to the stage, please.
साल पहले मोतीलाल ओसवाल था, मार्केट में मिसाल था, आज भी है और सदियों रहेगा। 37 साल पहले रिसर्च बेमिसाल था, एडवाइस का कमाल था, आज भी है और सदियों रहेगा। वेल्थ क्रिएशन का ही सिर्फ ये ख्याल था, हर साल माला माल था, आज भी है और सदियों रहेगा। आज भी है और सदियों रहेगा। हम अनुभव वाली टीम हमेशा साथ में रखते हैं, हर बात का सॉल्यूशन आपके हाथ में रखते हैं। हम अनुभव वाली टीम हमेशा साथ में रखते हैं, हर बात का सॉल्यूशन आपके हाथ में रखते हैं। भरोसा इन्वेस्टर्स का है सालों साल का, मोतीलाल ओसवाल का आज भी है और सदियों रहेगा। फाइनेंशियल लिटरेसी पूरे भारत में फैला दी है, ट्रेडिंग है मुश्किल इन्वेस्टमेंट की सलाह दी है। फाइनेंशियल लिटरेसी पूरे भारत में फैला दी है, ट्रेडिंग है मुश्किल इन्वेस्टमेंट की सलाह दी है। लॉन्ग टर्म निवेश ही है मंत्र इस बाजार का सफलता के तार का, आज भी है और सदियों रहेगा।
Good evening, friends. It's really a pleasure for me to be with you. I really feel proud being a chartered accountant like you, and I think that has played a very important part in my personal as well as professional life. Hari was persistent that I must come and talk to all of you, and that's why I'm here. So thank you, Hari, for your invitation. Rajesh ji also keeps saying, Rajesh Somani ji also, that I should come here. So I'm here, Rajesh ji, and whenever you also take over, maybe we'll try to be here again when you take over as the leader from Hari. So, friends, Mera kaam, I think Siddharth has done a good job in really, I think, make my job easier. And I will build from where he has left about the very, very optimistic outlook for the country. And I would say that the title is that my company is now 36-year-old. Now we are entering into 37 years. So we have been bullish for last 36 years. And in fact, we are even more bullish for next 36 years. And not only 36 years, but beyond that. Because I think the time for the country has come, and we are in the right place at the right time. And country under, I think, very strong political leadership is absolutely creating huge amount of positivity, not only within the country, but across the globe. And we all are the beneficiary of that efforts being put in by our leaders. Now, just being a chartered accountant, you also have a lot of fascination for numbers, so you will see a lot of numbers here, I'm sorry, but that's the way my talk is structured. You know, why Sone ki Chidiya? We were, if you look at the history of India, before 18th century, you know what was the GDP for the country India? Any guesses? Our GDP as percentage of the words, we were at about 1/4, right? Yeah, anywhere between 25 to 30% of the Indian GDP was of the world's GDP. And I think maybe it will take time, but we are definitely headed in that direction. And that's what you can see the number. In last 25 years, I took the base as 1998. Yeah, so we are 8.7 times, while the world is 3.3 times. So we are now about 3.7 trillion, maybe just below $4 trillion today. And you can see, and we are now at 3.6% of the world GDP, which will go to about 4.4% by 2028. So actually our percentage of the world GDP is definitely going to go up, but far below than what we were in the past. But definitely we are heading towards that direction. So you look at, now we are India's not only the fastest, in fact, one of the biggest also. So when the combination is a lethal combination, when you are the fastest as well as the biggest. And that's where you create huge amount of wealth. Sorry, I have to run two screens, left and right. Yeah, so you look at I think these are the numbers which are all known to you, that India took, since independence, India took 58 years to touch first $1 trillion economy. 58 years. Next trillion happened in 7 years. Third trillion again happened in 7 years. Fourth in 4 years. Fifth in, maybe it will take 3 years. So the speed is now becoming faster and faster. Maybe after a few years, we'll add 1 trillion each year. So we were 7th in 2015, now we are heading towards 3rd, maybe next couple of years. By 2027, definitely it will happen, maybe in 2026 itself. So when you look at next 25 years, we will be 10 times, and from today's 3.4%, we will touch 10.8% of the world GDP. Now, the demography is the biggest, one of the strengths for the country. When we look at the old age dependency ratio, this is one of the ratio which how the working population compared to the kind of, I think, overall old age population. You look at Japan, by, I think in 2000, you look at, there are two data, 2020 versus 2050, in next 25 years or so. India, look at that, from 22%, will be at 43%. Our old people will be about 43%, while other countries, we are today 22% or 23% today, which will go to 43%, but still will be the one of the lowest. And that brings explosive growth for the country. Look at Japan. Most of the people will be old. Look at Europe. Look at Germany. Look at Europe, UK, US, China. Look at China. From 34%, they'll become 92%. And we still will be at 43%. And that's what I think you are seeing in, I think, the numbers. So India's growth story appears decoupled to that of the words. We definitely are getting decoupled because world is facing a lot of challenges. Why we of course have some challenges, but I think our pace is far faster than the way the world is going. And there are a lot of factors. You all know, I don't have to talk about that, whether it is how we manage COVID, geopolitical things we have talked about, the uncertainties we are seeing, the conflicts, global conflicts we see here, the monetary tightening by the various economies you are seeing, the supply chain disruptions, especially post-COVID, we saw the commodity prices and the inflation which the world is going through compared to really, I think, us. The FIS flows, we still got huge amount of FIS flows except maybe last 1 year, but we got huge amount of flows, and of course, apart from FIs, we have huge domestic inflows coming from very domestic market itself, and the trade in many of the world's countries really slowing down. So India remain, I think, fantastic success story from that perspective. So we are stronger, we are efficient, and we are resilient. And the fundamental growth drivers, demographic dividend, what I talked about, reforms, you're seeing the reforms, and now Modi ji claiming or talking that in his next third term, there are going to be even bigger reforms. The strong banking systems with completely clean up all the balance sheets from the NPA, the availability of the capital, and the financialization of the savings backed by the technology. These are the big kind of, I think, moves for the country, which is adding to the country become stronger, efficient, and resilience. Equity, just look at still today, what we can say that we are 4 trillion or GDP to market ratio, we'll talk about that, but still it's a very small percentage of our household saving is coming to the market. Just 4.8%, which was of course 2.8%, but now it is 4.8%. Now, these are the numbers, how much is going to be the household savings. and what kind of percentage, and each percentage addition, how much money the markets are attracting. Every 1% addition gets 8 lakhs crores worth of additional money in the market. And we are at 4.8%, while the USA is at 45%. The equity to household savings, we are still below 5%, while the US is at 45%. Same numbers, India versus US, the comparison. So equity definitely will become the largest and by default the asset class itself. When we look at the quantum of savings, when we look at last 25 years versus next 25 years, $14 trillion worth of savings we had in last 25 years. Next 25 years, the estimate is more than $100 trillion. That is about more than 7 times. 25 years last versus next 25 years, 7 times more savings being handled by you as well as by us. So tremendous opportunities for chartered accountants and financial services professionals. In terms of the balance, now look at the consumption versus investments versus exports. We're very balanced compared to many other countries. It's quite balanced that you got 71% consumption, 30% investments, and net exports is about 2.7% for the country, while other countries you can look at that. In terms of forex reserves, we are now the 4th largest in the world. And it gained the most in 2023. So India will zoom from poverty to prosperity. Look at what poverty ratio we had in 1993, just 93, 94, just before the India started its reform programs. 45% of population was below poverty line. Today it is, in fact, it is 2020 data, it will be now about 7-8%. So from 45% to just below 10%. When we look at the per capita GDP, it's about 2,400 today. So, and world is about $13,000. So we are at 19% of the world. And that 25-year CAGR, if we look at India grows by 9%, and world grows at about 3%, we will be about 76% of the world's average in terms of per capita income in dollar terms. So market trends, few insights or the trends about the markets. Nifty 20 times in 20 years, 16% CAGR. 16% year after year, 20 times in 20 years. Market cap, what Siddharth was talking about is India. We can look at, while US is at 169%, Taiwan is at 241%, we are at about 107%. So when we look at the earnings, now of course, when we look at the valuation of the market, the fundamentals plays a big role in terms of what is the earning power of the corporate sector. We are only 8% earning growth, 8% CAGR earning growth between 2013 to 2022, only 8%. While our estimate is saying now anywhere it will happen between 7% to 13%. Most pessimistic will be 7%. Most optimistic will be 13%. So when we look at 13%, you look at the Nifty EPS going up from 807 to 2700 in the best case scenario. In the worst case scenario, it goes from 800 to 1500. So about 2 times minimum to about 4 times. When we look at the index estimate going, I earlier talked about the earnings. Now, same if reflect into the markets. The markets, while the earning growth was 8%, the market grew at about 12%. Now, if we estimate that the market will grow at about 15%, as we said that Nifty grew at about 16% in last 20 years. If we estimated 15%, the index Nifty will become about 73,000, 15% CAGR, 73,000. If you just grow by 7%, it will be 35,000 from 20,000. So it can happen anywhere between 2 times, about 2 times to about 3.5 times. So somebody said it beautifully that in the market, the ups are permanent, the downs are temporary. Keep in mind that ups are temporary and the downs are, ups are permanent, downs are temporary. और किसी ने बहुत अच्छा हिंदी में कहा था कि मार्केट हो या इंसान, आखिर में सबको ऊपर ही जाना है. मार्केट हो या इंसान, ऊपर ही ऊपर जाना है. So that's what you see in this chart. So when we look at how really I think the Nifty can happen in next 25 years, just numbers, if you look at pessimistic 10%, base rate 12%, 15%, in 25 years, Nifty can become 2 lakhs plus, 3 lakhs plus or 6 lakhs plus, whatever base you want to take. Most conservative 10%, 2 lakhs. Optimistic 15%, I would say 15% is realistic, it's not optimistic. Because we had grown at about 16%. And the golden era, as Hari said, that is not the decade but the century, right Hari? The next century belongs to India, then definitely we can look the Nifty at more than 6 lakhs. So आप undermine mat kariye. I think don't look at, a lot of people say, sir, market is up, what should we sell and get out? I don't think so. The movement definitely is going to continue. There can be corrections, there can be reactions, but I think you can see that the trend which is up is going to continue. So few thematic trends from the economic side. You look at the consumption story. Automobile, when we look at consumption, auto is one of the biggest kind of, I think, consumption, part of the consumption. We look at financials, BFSI sector. We look at manufacturing, infrastructure and power. Yeah, so look at FMC retail. I don't have to talk too much in the numbers, but I think this is the big trend today. And look at today's organized retail is still very, very small compared to unorganized. And then you look at the growth. So huge amount of scope for the FMCG and the retail business, especially the organized, apparel, accessories, jewelries, footwear. These are the large components, apart from few niche components for the businesses. I'm just not able to align, I think sometimes. Yeah. So EVs, electronic vehicles, again a big trend. Systematic credit growth, now economy getting formalized and huge amount of saving being generated means the credit growth is going to also remain very, very strong from here. Yeah, so IT industry again, one of the big kind of dollar earnings for us, and there are various trends you've seen from 2000 onwards to 2023, from Y2K to outsourcing to SMAC, digital to Zen, AI, artificial intelligence. So, and that's, I think, is going to be very, very large. You know, services are already more than 60% of our GDP, and within the services, healthcare and IT, they're the big, and BFSI, they are the big services which are actually growing faster. Then we look at the digital infrastructure. This is physical infrastructure. We just keep about digital side. That's again a big growth story for the country. Look at the kind of growth we are seeing in roads, railways, airports, power, many data points and many big trends you can see. So these are the themes I talked about, which really are driving the economy, and it's going to drive further from here. Now, I think definitely few hurdles or where we can see some kind of speed breakers, or where we see India can do far better than what we are doing today. Unfriendly and uncertain government regulations. Somewhere, I think we feel that now over-regulations in many sectors actually are somewhere coming as a hurdle for the growth. High tariffs, outdated labor regulations, unemployment trends, the cumbersome land acquisition process impacting especially the manufacturing sector, complex import duties, inadequate infrastructure becoming better, but still compared to the size and the requirement, still infrastructure lagging behind the growth. High volatility and dependence on crude, commodity inflation, geopolitical uncertainties, and sluggish global trends. So these are, I think, few things which definitely are a concern and make constrain the growth for us. But you know, the countries India like elephant, so movement can be slow, but it can be for sure. So this was the whole story about India as Sone ki Chidiya. Thank you, friends. It was great to be with you here, and thank you for your patience and opportunity.
Sir, सोने की चिड़िया इंडिया एंड तालियों की इतनी कमी कैसे हो सकती है? Can I have a big round of applause for Motilal Ji Oswal for coming all the way from India only for us to talk about Bharat Sone ki Chidiya. Okay, can I invite Chairman and Vice Chairman along with Treasurer on the stage to felicitate us and share a token of love from our side, sir. Thank you very much for traveling all the way from India for all of us. Thanks a lot. Can I have all the speakers, the chief guest, and all the speakers on the stage for a group photo along with the ExCom? moving on to our next session, let me ask you a question. How many of us wants to have a stable income even after retirement? That is, the money continue to get credited in our account to take care of our expenses when we sit on the seashore enjoying the tide with tea, coffee, or any drink of your choice in hand. How many of you want a monthly income to get credited after the retirement in your accounts? I can see very few hands. Everyone doesn't want money. Money does not inspire you, right? Okay. So if you want to say yes, you can shout out, yes, I need a retirement income, otherwise we can skip the next session. No sound. Okay, so this session is for you. From India, the golden bird, we move on to the gold pension plan, a plan which can help you to achieve your wish. And the genie who will fulfill your wish is national bonds. Let me invite our ExCom member Dharma to introduce our next speaker, Mr. Rami Musa, to all of us, who will explain and educate us on golden pension plan by national bonds. Can I have a round of applause for Dharma, please? तालियां नहीं बज रही है, sir. Thank you.
Good evening, everyone. First of all, congratulations for being part of the team which won the Best Overseas Award on the 11th year. Whether you are sitting as just a member or contributing member or a speaker, you all were part of this success. 41 years before, CA Rusiji Patel and founding members made a strong foundation which we build upon. So when I first time came to the chapter, I was sitting somewhere like you, and I never thought I will be part of the stage. So everyone here have a share of the success, so we need to take this forward. So congratulations. Coming back to my duty, introducing our next speaker, Mr. Rami Musa, Executive Director, Sales and Distribution, National Bonds. Mr. Rami Musa is an accomplished professional with a Bachelor of Business Administration degree from Brock University, Canada. With over 24 years in the market, Rami brings a wealth of experience in both sales and retail credit risk management, as his career has spanned across diverse markets, including UAE, Saudi Arabia, and Qatar, and has served in renowned financial institutions such as Standard Chartered Bank, Al Hilal Bank, Al Rahiji Bank, and Dubai Islamic Bank, as well as other institutions. National Bonds, since it has started in 2006, it was part of safety net investment for many of us. Ladies and gentlemen, please join me to welcome our next speaker, Mr. Rami Musa.
Good evening, everyone. Thank you. Let's go back to 2006. Dubai was booming, the economy was booming, everything was going well. Banks were running promotion left, right, and center about spending money, taking credit cards, taking loans, auto loans, facilities, everything that you can think of. Take it now, pay in a year or 2 years. But there was one thing missing, and this is where the vision of His Highness Sheikh Mohammed comes in. There wasn't a single entity that cared about savings or building a safety net. And this is how national bonds came into life. He decided that there has to be a company that focus about building those savings. And in 2006, National Bonds was created. National Bonds is owned 100% by ICD, the Investment Corporations of Dubai. It is the sovereign wealth fund arm of Dubai government. What do we believe in? We believe in two things: spreading the culture of savings and building your safety net. This is what we do, this is what we're good at, and this is what we will continue to do. What have we achieved since 2006? We've served over 1 million customers. We have an active clients of 180,000. We're serving over 300 corporations and institutions. Our AUM stands at 13.5 billion dirham as of now, and it's growing, and we're expecting to close 14.5 this year. We've paid over 2.5 billion in returns to investors who have placed money with us. And we've made over 216 lucky winners a millionaire over the past 17 years. What sets us different than the banks and the other companies? We have no hidden fees, zero. Everything is upfront. You can take your money, no minimum balance, nothing. Everything is upfront, and it's clear. You can leave us at any time, unlike some other companies where you invest your money, you're not allowed to leave for at least 5, 6, 10 years. You can leave after 30 days. It's your money, it's not ours. You can invest with us, you can leave at any time. You can start from as low as 100 dirham. Tell me one investment company that can say that. We have partnered with over 500 vendors in order for us to come closer to you. All the exchange companies, majority of online businesses are partnered with us, and you can save with us through them. We have a beautiful reward program that is a first and is unmatched in this region. That's worth about 35.5 million dirhams. We pay about 240,000 in cash prizes on monthly basis. We give 1 car every month. We give 2 million every 3 months. Finally, and the most important, even if you're not aware of us, if you just want to know about us, if you're thinking of helping yourself or the company that you work for, we do free financial literacy program. Give us a call. We'll come to your company. We'll educate you. We'll educate the staff, and we'll help you save. These are some of our key clients. We have over 300 clients that have partnered up with us in order for their staff to save money with us. We also do what we call a saving index, and we've been doing this for about 11 years now. Last year, I'll just share 4 data points of what you, as clients, have stated to us. 62% of employees of you stated that they want the company to help them save. 82% of employees wanted their company to save the end-of-service benefit. Why? Currently, you gain 0 profit, 0 interest, 0 benefits from your end-of-service benefit. 43% of employees stated that they have additional income. This additional income could be a spouse income, could be rental income, could be an overseas income. 1/3 of the respondents stated that they want to retire in UAE. We know how expensive it is to live here. And this is where we come in and we help you save for the future. What we do is simple, and it's categorized under 3 pillars. We have programs for the company to help the staff. We have programs for the staff themselves, for you and I, and we have programs for the treasurer or the CFOs. I'll be sharing with you 2 programs where you and I can use and for the benefit of our future. The first one is my 1 million. It's simple. It is what it says. We have a program that we have developed, and we sit with anybody who is interested, and we inform them of how much they have to save per month for the next number of years that you decide. Along with our profit and our returns, we'll guarantee $1 million after a certain period that is presented to you upfront. Second salary, this is something I personally have started. I know in 10 years I want to be retired. So what I did is I started saving on a monthly basis a certain amount where after 10 years, national bonds will start paying me back for the following 10 years 150% of what I saved. So just to give you an example, if you want to save 1,000 dirham per month now, for the next 10 years, on year 11, I start paying you back 1,500 dirham for the following 10 years. If you want more information, we're here. Our kiosk is outside. We can sit with anybody who is interested to explain. Treasury Solutions is very simple. Majority of companies have an excess cash. They use it or they place it in banks. We can help them. We have placements as low as 1 month, and we go as high as for a tenor of up to 5 years. This is something that is custom made. We sit with every company on the side. We basically agree on the terms and conditions and move forward. Golden pension plan. This is something where I would assume everybody would be interested if you are staff or if you are an owner. What we do here is very simple. The end of service benefit that is owed to you, to me, and to everybody who works in this country currently is not being invested or is being used for the company itself. Sheikh Mohammed came up with the directives, and it will be passed into law very soon, where you will have the right to invest your end of service benefit. And this is where we come in. We work with the company to place the end of service benefit with us. We open accounts for every single employee of that company. That staff has the right to see the amount he's owed, but he cannot withdraw it. So the company is safe, the staff is safe. Now, the nice thing about this is two things. One, you end up with a return every year. So if the return is 5%, your 100,000 dirham becomes 105,000 without you doing anything. Number two, you as a staff will enter into our loyalty program, which again, you could be one of those lucky winners that wins anywhere between a car, 50,000, $1 million, whatever it is that we have running, you will be entering into it. What we do is very simple. We're not an investment company. We do not take risk. We ensure the capital is preserved, the capital is protected, and we ensure a moderate to high return to any of your investment. You can start from 100 dirham up to unlimited. We'd love to hear from you. We have staff here. You can call us. We'll come to your office. We'll explain everything that we have. And we'll be more than happy to work with you. Thank you so much.
If anyone has a question, we can take a couple of questions. No questions there. That is good. I loved one thing on the slide. They are hungry? No, I love one thing on your slide. It says my 1 million. So that is my. So everyone can invest and get 1 million from national bonds. If you have a pension plan, please go for it. You'll love it.
We actually have, may I use you? Here's a live example of one of his friends who have won a car with us just a couple of months back, correct? Here's a live example of what we do and how we change the life of people who invest with us.
Sir, you have selected the right guy. He is nothing less than Regional Director of Middle East and Africa, Prabdeep Singh Baweja, whose friend has won a car in national bonds. So there is a possibility that you can win it. If you need more details how to win it, you always know Prabdeep Singh Baweja. Reach out to him and you may win a car. His friend win it and you are his friend, then you can also win it. With this, give a round of applause to Rami for sharing golden pension plan with us. And can I request Chairman, Vice Chairman, Dharma, and Prabdeep Singh Baweja, since you are here, he's the Regional Director of Middle East and Africa, on the stage to share a token of love with our own Mr. Rami. Give a round of applause to Mr. Rami one more time. Perfect. Let's get ready for another interesting session. How many of you watched Shark Tank India? Shark Tank India? Wow. How many of you liked the pitch, liked an idea, and wanted to put your money in that entrepreneur? Today, startups have emerged as a new asset class, where you as an investor can invest and earn returns. How to go about it? How you can become that baby shark who can put money in startup ecosystem we will learn in our next session. I'm confident that soon we will have similar Shark Tank in UAE, where few among us will be those sharks whose journey will start after this session today. Let me invite our ExCom member Ashna to introduce our next speaker, Mr. Apurva Vora, who will be speaking on the topic opportunities for CA in Indian startup ecosystem. That is how you can invest and earn money in the startups. For now, please welcome Ashna on the stage for the introduction. Give a round of applause to Ashna, please. तालियों में आपके जोर नहीं है, सबको भूख लग गई है.
नमस्कार. जहां इंडिया और यूए की बातें चल रही है, नमस्कार तो बनता है. We all know India is witnessing a boom in entrepreneurship, with startups mushrooming across various sectors at rapid pace. Startups need chartered accountants. Opportunities for us, isn't it? In this dynamic environment, chartered accountants have the opportunity to work closely with innovative entrepreneurs, help them scale their business, and contribute to the growth of the Indian economy. Today we have amongst us Mr. Apurva Vora, who carries over 3 decades of work experience with over 2 decades in financial services. Mr. Apurva Vora plays a very critical role in global investment products as well as alternative investment space. He carries wide network and experience of being an interface for investment products providers, wealth management firms, family offices. If I ever plan to do a startup, now I know whom I should approach. Without taking much of your time, please put your hands together for Mr. Apurva Vora.
Good evening, everyone. Okay. So we have had a wonderful session on listed equities and bonds. Now comes another topic which I can assure you is definitely going to be interesting. I was just looking at when the question was asked that how many people watch Shark Tank. Quite impressed to see the good number. And I'm very sure that who are not watching those will possibly start looking at that much more going forward. So a short presentation, we're going to talk about the opportunities for CAs in the startup ecosystem. And a very quick, short disclaimer, the objective is more to be academic in nature in this presentation. And I'm going to rely a lot more on certain data sets, because in absence of data, we will not get convinced so much about what could potentially be a relatively newer subject for us. So essentially, we're going to cover 5 things, but more importantly on the startup ecosystem in general and what role we as an audience can play in this. Quick, who we are. The company Finwall, which I represent here today, is a 50-50 joint venture between 2 entities. And this is where I will give a little background because it's important for us to have this background. This is a joint venture between an entity by name India Accelerator and Finolutions LLP. India Accelerator, as the word accelerator comes in the name itself, is one of the leading startup accelerator based out of Delhi and presents across many other places as well. Been in the forefront of grooming startups right from grounds up, and has been around for a little over 7 years. Also have been awarded with India's best startup accelerator by the government of India in the past. So there are pretty decent stuff for us to talk about on that. Finolutions on the other side has worked more with family offices and wealth managers and evaluation of investment options and products and all. So we came together to offer startup as an asset class or as an investment asset class to the audiences. Certain important things for us to look at now. First, on the prediction part, India is expected to do significantly good in the days to come. And we have had such discussions in the past, so I will, again, give this this particular slide a skip. Now comes some of the other important stuff. This is about prediction. Now we come on hardcore numbers. And this is where we start looking at startups a little more seriously. As a part of my introduction, one word which was used is we have seen startups mushrooming. So I'll use the word mushrooming and look at these numbers of nearly 120,000 startups that exist in India today. If I use the word mushrooming here, no offense, very genuinely I mean it. Till about 4 or 5 years back, this number was close to about 4,500 to 5,000. So what has happened where these numbers have astronomically changed? Is it just mushrooming? Possibly the answer is no. The word startup was defined by Government of India in 2016. Till that time, the word was not defined. Startup registrations were not mandatory. So there were a lot of businesses which were happening at that point of time without that being registered. The only thing that happened subsequently is that registration became a norm. If you want money from any fund, you need to be a registered startup. The moment this one particular requirement comes in, every startup would love to get registered so that they can possibly get the benefit or possibly get the funding from a fund. Just by doing this, we started numbers astronomically change, and we see more and more startups getting registered now. That doesn't mean that there were no startups existing before, and now there are a plethora of startups. It only means that startups are getting registered. We also need to remember one thing. If the startups are getting registered, then there is some kind of a data mining which is possible. In absence of data, if you're not registered, how would government even know where are the pain points of startups in this country? Where the startups are today, at what stage they are, is what level of funding required. In absence of data, there is nothing that the government can do about it. And therefore, it was critical for a data mining to begin in Indian startup ecosystem. We have become the 3rd largest startup ecosystem in the world. Interesting data sets. One allegation which was there is that as compared to a lot of other countries, women participation in startups is very weak. Now even that data is out very recently. This data was not available till some time back. But even that's encouraging. Startups which have patents with it, typically the technology startups, that number is growing quite fast. The other important thing is that we had, in the earlier part of our startup journey, we had very limited incubators and almost non-existent accelerators in the country. Today, these are institutions which are giving nice shape to those ideas, which is going to make a lot of difference as we go along. Final important number, which is very important for somebody like us who run funds and syndicate in startups. There are less than 8% of the startup which are funded in India today. And this we are talking about is the one which is beyond friends and family round. Getting money from friends and family doesn't make you a nice startup, and it doesn't make an investor a qualified investor. Out of friendship, out of obligations, you could get money from friends and family. But if I'm presenting my startup to this kind of a group for the first time, and if only 5 people out of this come and say, your idea is good enough and we want to invest, how do we do that? Is the first validation that my idea has an appeal. Now, what do we mean by, and why the importance of beyond friends and family? And that means that if I do a first basic filter of what kind of startups we would like or we would want to invest in, the first we would look at is that companies which are going beyond friends and family would be my first filter to look at. There is another thing which is not there on the screen, but it is equally important, is we also like to see whether the startups are having qualified investors supporting them or not. Having an investor, even an unknown investor, does not necessarily make it a good startup. And therefore, I use only the word friends and family, but the real words here are friends, families, and fools. Right? We also need to filter the fools out of this entire exercise. So what do you do? So one way to look at a qualified investor is to look at the domain expertise of an investor. I'm using few names purely for namesake. If there is a food company, and if Mr. Vijay Shekhar Sharma is an investor, I wouldn't call him a qualified investor. Right? He's an investor, he has built a good company, everything is fine. But he doesn't come from the domain. If the same investor becomes a qualified investor if he's investing in a fintech entity. Now, if I apply this additional filter of how many qualified investors do we see in the startup ecosystem today, the answer will become almost around 2.5% only out of the total universe that you see here. That means that universe of qualified investors in the startup, those numbers are genuinely still very, very less. Right? Okay. For any part of the economy or anything to grow, you need some important catalyst. The biggest catalyst for growth of this internet economy or startups in India, we believe, is the cheap internet data that we have in India today, which has made the internet economy affordable and accessible to the Indian audiences. Even the senior citizens are seen hooked up on YouTube and a lot of other stuff today. How and why? There was a belief few years back that with the given illiteracy in India, it will be difficult for an Indian to embrace this kind of technology. But I think we have embraced this technology exceedingly well. And the result of that is something which you all know in form of the success of UPI, the success of Jan Dhan. This is all because of one thing. We had cheap internet data which was very effectively used, which helped smartphone penetration, which helped startups to groom, and what we call the internet economy to groom. One more thing, for any industry, it is important that you have one big catalyst for right or wrong reasons. Many times, there are this kind of arguments that come in that India has done exceedingly well in the software side and all. Very difficult for someone to admit openly, but one of the reasons why India did very well in software development years back was possibly, and I use the word possibly with some degree of caution, is that we had a lot of piracy, which helped me have access to multiple languages in software, and I could learn much faster compared to my counterpart sitting in US who had to buy every licensed software for them to learn something. Right or wrong reasons, we need catalysts for growth is the reality of life. Another thing which has always been spoken and presented in many presentations is India's young population, which is going to help this even further. Because we are going to see internet usage, the internet economy to groom and grow even better. given the fact that India's population is a great favorable demographic advantage for India. Another very important stuff here. If you look at the Indians investing in Indian startup, that count is only 26%. 74% of the investments that happen in Indian startup ecosystem comes from overseas. One way to read is, Indians don't believe so much in the Indian startup ecosystem as what the foreigners do. But I'm not amused with this. The same scenario was there 10 years back in the listed equity. It was the FIIs which had a much bigger belief in the Indian story, India's growth story. It's only now that we start talking about India growth story in the listed equity space. FIIs were much early movers in this kind of a belief. Our take is, we are seeing a similar kind of a scenario in startups, where the overseas investors see more value in Indian startup ecosystem than what Indians do. But smart thing is to pick up the trend early. That's the time you make the maximum money. And therefore, if you believe this trend is true, and if this is going to continue, that Indians will start investing more in startups, which is what it is likely to be, then the time for investments is now. Here, I take a pause out of this presentation and give a couple of other illustrations. Some real live examples that we have seen in the recent times. First, let me start with a reference. If one goes through the PDF file, in case if you have the backdated PDF file of the last full budget speech by Nirmala Sitharamanji, there was a reference of the word startup 21 times in that speech. 21 times a word being there in that speech, and that too a word like startup, tells a lot of story. 10 years back, if there was a finance minister making a budget speech, only word which could have appeared 20 times plus would have been agriculture. So there is something fundamentally and big which has happened in this period, where people or the government has started shifting the focus towards startup. I'm not saying against something and moving to startup, but startup has become a mainstream in many ways. For any massive structural change to happen, it is usually the government which will have to take the first lead. Private sector would usually follow. We are seeing a similar kind of situation today, the way in which government is now making startup mainstream. And a couple of examples here. A very small constituency, an election constituency in Ahmedabad, a constituency by name Vejalpur, very recently saw a Vejalpur Startup Festival organized by the local MLA. He announced that there are 3-point agenda for this festival. One, we want people to know what is a startup. Live demonstration of a couple of startups, and how to invest in startups. Why would an MLA talk about investing in startups? Right? That too of a single, simple, small constituency in Ahmedabad. To our surprise, the audience was little more than 4,000 people in this case. 4,000 people, and I'm just putting some arbit numbers. I have no idea of the exact number. I just believe that 10% of that audience possibly would have gone for the third agenda point of how to invest in startups. If that is the case, in that one constituency, there were 400 potential investors who had gone to understand about startup ecosystem. I believe that is massive, and you will see in the couple of slides later some of the data point. This is massive given this data that you will see in the next couple of slides. One. Second, even a smaller place than Ahmedabad, again in the same state, a small district by name Mehsana, the district collector invites 5 people to come on a panel discussion on a topic where the audience was about 250 people from business houses. And the title of that event was known as Startup as an Investment Asset Class. Why would a district collector call up 300 people in the audience and promote startup as an investment asset class. Right? When government machinery is making this kind of efforts to make startup mainstream, what we have to read is that this is where the things are going to move to in the next few years. Ideally, we should be amongst the first movers to take that advantage. So if we haven't looked at startup as an ecosystem or startup as an asset class, we have to learn a lot that if a small constituency or a small district would have this kind of awareness, and if we have not experienced startup well enough, the time for introspection is here and now. I spoke about why 400 potential investors in one event is very important. Is because if you look at this data, as on 31st of March 2023, India had only 9,500 angel investors. If one event can potentially add 400, think of these numbers which it could grow to in the next few years. Right? The important thing is not how many investors we have, but the speed or the growth rate at which we are growing as compared to anyone else. And so is the case with institutional investors, that we are growing significantly fast and in a more structured fashion. These are very, very important numbers for us to look at and consider startup as an asset class. If we are advising investors, we should advise investors for these reasons, because this is where even the end investor needs the maximum value. Another important slide. And I don't want to make political statements, but there is a purpose for me to put this slide here. Some of the biggest names of internet economy, but you look at the user base of each one of them, or most of them, is largely Indian. Right? Now, if there is one gentleman who will sit on the beach of Lakshadweep, can change the dynamics of tourism industry, you will agree that you will agree with one thing, which is my prediction. Next 5 years, you will see some of the names here being replaced with Indian companies. Any doubts? This is what we as Indians are capable of doing. And I'm saying we as Indians, we don't need one person to do this. Collectively, we can do this. Now, if this is a kind of user base, and if the entire ecosystem is growing, this kind of changes will happen natural. You don't need a brand ambassador to do this thereafter. Right? Now, let me come to some AIF data, and this is a very busy slide, but I will talk in a nutshell about this and why this is important. I'm a firm believer that this is one industry, the alternate investment fund as an industry, has been a game changer in many ways. I've been very lucky enough that I've been following this industry right from the very inception, just almost the same month when the first AIF in this country closed, is the time we got into our business and said we will focus on AIF as an industry. Right? Some of you who would be aware of, mutual fund data is available everywhere across. So I'm not going to talk about mutual funds. But equity PMS, which is an industry which has grown very well in India, which is a 26-year-old industry. Incidentally, I was the first employee of India's first PMS company called ASK Raymond James. So I've seen even PMS industry grow very nicely. But that industry, 26 years of history, AIF has got a 10-year history, and AIF is already 3.5 times the size of PMS industry today. Right? It's grown massively. Now, what is very important is, in the period which we believe that it has been a period of startup winter where, after the listing that happened last year of couple of, startup IPOs that came and people did not have great experience of those kind of investments, We have started using the word startup winter, not only in India, but globally, saying that these are the bad times for startup investments. In this period, last year, we have seen a 56% growth in investments, despite our belief that these are not the best of the times. Smarter investors take advantage of this kind of distress situations where we feel, where we keep on complaining that things are not good. Is the time the best of the opportunities will come in, and smarter investors will grab those opportunities at these times. And why I consider venture capital, broadly I'm using the word venture capital for right from private equity, VC to angel investing, all, as smart investors, is what I will highlight in the next slides. First, even before that, if I look at AIF as an industry, nearly 50% of the industry is in the unlisted space, the private equity, venture capital, and angel investing. Listed equity, which occupies our mind most of the time, is only 16% of the total AIF industry, which comprises of 12% of long-only funds and 4% of hedge funds. Bigger industry or bigger chunk goes for the private equity, venture capital, and angel investing. Again, if you look at the growth chart of the number of registrations of AIF, it's been extremely consistent. There is absolutely no dip that you see in terms of enthusiasm towards AIF. Where they are based out of is not very important, so that last part we'll give it a skip. But the next important slide. The two of the worst years for startup ecosystem, the last 2 years, is where we have seen the maximum number of category 1 funds, the angel funds, getting registered. This is quite different than what happens in the listed equity space. If you look at mutual funds, it's only in the bull run of the market you will see more and more mutual funds launching their new schemes. Why? Because a typical mutual fund investor will invest after looking at backdated 5-year data for him or her to be comfortable and then would want to invest. It's investing in hindsight. You need past track record for you to take a future judgment. Venture capital is investing in foresight. The years which look bad is where the biggest opportunity which was felt by smarter venture capital funds, and we see the highest number of registrations happening in those 2 years. It is not only just looking at one column of Cat 1 funds. The category 2 funds, where bulk of the venture capital private equity funds lie, even that count has seen an improvement. And why I consider that to be equally important is that exits out of my fund will happen only there. And if that count is not growing, then I have a reason for me to worry about my exits. But when even the Cat 2 funds, the venture capital funds and private equity funds are also on a rise, I am much more safer for my exits. And it is usually the exit which worries the maximum number of people. So where you have a possibility of higher exit, which the numbers tell you, it's even better. And all these numbers that we're talking about is only in the SEBI regime. But we now need to remember one more thing, is that we have an IFSCA regime in GIFT City, Gandhinagar, which is equally big. And you already have about 104 funds which have got registered there, on over and above the 1,223 that exist in the SEBI regime. Right? So this industry is slated for a fairly decent growth, is what we believe. What role can CAs play? Honestly speaking, while this is the title of this presentation, I don't know what to speak about this topic because you yourself know very well what role you can play. In fact, you can guide me even by adding a couple of pointers here, right? Because this is a legendary crowd and I'm not a CA, by the way. But anyway, quickly. What we have seen at least, and I'm talking about our interactions in this community, is more and more, and especially the newer people who are getting into this space, they are looking at this space or chartered accountant as a role beyond the taxation and audit roles, which has been the traditional roles. People want to play bigger roles and multiplicity of roles and not just the traditional practice. If that is what it is, and if this is where the trend is moving to, we believe that the segment that I'm talking about, a startup, might be a real interesting space for this audience or this community in general for them to look at. While there are a lot of areas in which CAs are very prominent, they do some great work. The last point which I've added here is something which is even more important, and we believe this is going to be very big, is your role in startup as an asset class. If a district collector in a district can do it, this audience can do 10 times better. And that's the bare minimum expectation I can have with this community. It is giving a much better enhanced experience to your client segment is what we believe can happen here. So what do we do? And it's important that we highlight some of the things in terms of sharing the thoughts here. So we essentially do run Category 1 angel funds. We have already closed one angel fund. We're in the process of closing our second angel fund. We are in the process of obtaining our license for Gift City Fund, which will allow international investors to invest into Indian startup ecosystem. So, and we also have a Category 2 fund within the fold. So as a family, at Finwall, we have 4 different funds already as we speak. I'll add one more thing here. The Category 1 angel fund as a category is a lot more difficult category for most of the people, most of the funds to run. And therefore, in India, there is not a single player who has launched 3 Category 1 funds in a row ever. Maximum, somebody will launch the first fund, the second fund, and that's it. Then you move to the Category 2. Why? And let's understand and take 2 minutes on this. As per SEBI's basic requirement, running a Cat 1 fund is a hugely operational heavy and a difficult task for someone to do. Every investment that is being made, while I may look like a fund manager, I don't have a right to decide everything on behalf of the investor. I need to take explicit mandate from an investor for me to be allocating his or her money into a particular startup. That means that if I'm running a fund of 35 startups, I will have to reach out to investors 35 times, take approvals, and then only I can invest the money, which also means that for every investor, there could be different valuation and a different NAV. Extremely difficult for any fund to manage this kind of complexity. Why we have been blessed that we can do that is that between me and my partner Ashish, who is sitting here, we have a fairly large 55-member team for us to manage most of the funds that you see who run this kind of funds in India. And I'm saying most means more than 50% of the funds for sure, they would be operating out of WeWorks or Regus with a 2 or a 3 or a 4-member team at best. You cannot run a complex fund in that kind of a structure. Then what happens is that despite the focus on angel investing, you move to a slightly late stage investing because operationally you can't manage this fund. Whereas we have felt that it is important that operationally you create this kind of a vehicle and run it for long. Besides this, we believe one big USP or difference that we bring about is we are a complete B2B firm. We do not work directly with end investors. We work only through wealth managers and chartered accountants as referral points for us to source clients. Right? So it's a very collaborative way of working is what we believe, especially to this kind of an audience. Quickly, in fund thesis, and while this might look a busy slide, and I'm not going to talk about all these points because everyone in every presentation will say that we invest in good quality companies with good founders, solid business models. So is the case here as well, so I'll ignore some of these things. But a couple of things where we are very clear about is we do not necessarily like if someone comes up and says this is the first of its kind of an idea. The first mover is not necessarily the best of the things for us to invest in when it comes to startups. because we believe it's a costly exercise for you to create that kind of a model. First person will do a lot of hard work to learn the hard way, build something. But we believe the better entrepreneur is the one who is learning in the sidelines, looks at the inefficiencies of the first business, and builds a business which is more efficient than the first one and runs the business successfully thereafter. Let's take examples after examples, we can talk about. It was not Zomato or Swiggy which was the first in food delivery businesses in India. It was a company called Food Panda, which we don't remember today. Right? So what happens is, you have to be smart enough, or you have to put money on that smart guy who is efficient to exploit the situation and make money for him and us. Those are some of the important things that we look at. On other things, we are extremely focused on co-investments, because we believe that if you have good quality co-investors, everybody together will work for an exit out of the company. If I am the sole investor in the company, I'm the only one struggling to get exit thereafter. Right? So co-investment as a theme is something which we like. Obviously, that itself says that we are exit focused, plus we do a lot of other activities around this. Because you invest early, we have a lot more number of rounds for us to consider for exits. If I was investing only in the late stage, we would find it difficult to find exits also. So these are some of the things that we do. Obviously, focus on governance, and we would love to be in the entire value chain. So if thematically something is going to do well, we also call it as an aircraft carrier approach, where you would prefer to be in the entire value chain, and something out of this will remarkably be doing well. So we are looking at building a win-win partnership for making it a truly global fund. And of course, this is going to be a very collaborative approach. Quickly, last two slides, our track record. These are the kind of co-investors with whom we have invested in startups so far, in our little over 1.5-year journey so far. Right? So some of the real good names that you see here are the kind of co-investors with whom we have had investments. And these are the companies that we have invested in this journey. If I start talking about the companies, it will overshoot, so I would certainly leave it at this only. Since these are early stage companies, there could be a comment that we have not heard the name of any company out of this, but I don't expect you to know these kind of companies today. If the company are known to you, then we have not been true to label identifying the companies very early. So just wait for some more time, and I'm sure you will learn a lot of things about few of these companies. Thank you.
If anyone has any question, this is the right time. We can take a couple of questions here, or you are clear with all the startup ecosystem. I can see Rajesh's hand is going up for the question. Yes, Rajesh wants to go. Can I have a mic there, please? Mr. Rajesh Shomani.
While you have given a very impressive number of the startups in the country, but how many percentage have been successful, or how many percentage are struggling to get success?
To be honest, this was an expected question. And let me give you a little more authentic number which will appeal everyone. Rather than giving a straight answer of how many startups succeed or not, because that data is extremely difficult for me to give today, because the data mining done by government is not specific, and they don't give specific numbers in terms of how many have been success and failures. But I can tell you one thing. Category 1 angel funds, which are the funds that invest in startups, since 2014 till now, have delivered 37.08% returns compounded annually. And this is SEBI and CRISIL data. Now my question is, how many startups are successful or failure? Doesn't matter to me if I make 37% returns net of expenses. Right? So frankly, one straight answer I don't have, But an indirect answer is this SEBI data which is available in front of us.
Other way, if you ask that how many companies are running now successful or business or listed, or if that percentage can also.
So very minuscule, let me put it this way. See, unfortunately, the real gains out of startup will come if you have exits even before the IPO. Our take is the best time to exit if you are a startup investor, the best time to exit is when it is a pre-IPO company. The moment the company becomes a pre-IPO company, the correlation is with the listed equity market. The returns are in percentage terms. The returns now are not in multipliers. So as a startup investor, I would prefer to invest till the time a lot of people start coming in the pre-IPO stage is the time for me to exit out, ideally. So that is one very clear that we don't necessarily want to wait for the IPO because that's a long journey. That's one. Second is in India, we don't see this kind of a structure as yet, but things are changing fast is what we believe. Let's take example of a company like Google. Google has become a superpower by acquiring a lot of businesses, whether it be Maps, whether it be YouTube. You don't want to build everything of your own. And those acquisitions are great opportunities. Now, let me give you one example, not the best of the example to give, but let's take this example. Byju's, right? We all know what is the fate of Byju's. Byju's would have acquired multiple companies. Whether as an investor you have made money in Byju's or not, I don't know. You would not have probably. But every company acquired by Byju's, investor would have made money in those companies at least. Because Byju's was willing to pay a valuation which was decent enough. This is where the money making happens. It is not necessarily the IPO or the late stage where the money is being made. And therefore, startup is a little more opportunistic investment rather than a very simple. So the way in which we have to think about this investment is very different than listed equity. Unfortunately, I don't have this slide here, but we use one slide in our presentation. We're right from seed to a small sapling coming out to a fully grown plant. There are various stages in one screen. And I ask often this question to investors, which is the plant where you would like to invest? Most often people will say that the last plant where we see the fruits is where we feel the safest and we want to invest. Now, in a different way I put this across, and I'll be brief. I would at that time say that suppose if we were to buy this plant and if this plant was available for 1,000 rupees, what will be the value of this plant over the next 5 years? 2,000? 2,500? 3,000? At best 3,500. Now this is the listed equity way of looking at a company. Nothing wrong in it. Everything is good in portfolio. I keep on saying there is no bad asset. There is only bad pricing. So everything is good. For startups, if I have to look at the same graph, rather than buying a fully grown plant for 1,000 rupees, I will buy a packet of 100 seeds for 1,000 rupees. Who makes more money is important. Now, whether 10 plants out of this reaches that stage where I can sell it off for 1,000 rupees, as a listed equity investor, I will feel that 90 seeds have failed, it's a bad investment to make. Right? I would see that if 10 of those seeds have become a plant, I have made more money. This is a startup way of looking at things.
Perfect. I can see. I will take one question. One hand I saw first. Venkat sir, please go ahead. Give him the mic. This is the last question of this session.
We will be around for dinner as well. So if there are questions which are not being addressed here, we can always take one-on-one thereafter.
Good evening.
Please.
Very good presentation.
Thank
Just
you.
wanted to understand the logistics of this startup. Like generally, what is the ticket size in this kind of funds? Over how many months or years we need to deploy the fund? And what will be the general exit period, as you correctly said, we don't know the returns.
Correct.
And in the case of startups, it's always said, there is one saying which goes, for getting an exit, you require a bigger fool who is ready to pay a bigger value. Just want your feedback on that.
Correct.
Thanks.
Yeah. So again, a very interesting question, nicely put. So let me come to the investment ticket size and how does it work. If you are investing in a fund, the minimum ticket size of the fund typically would be about $50,000 of commitment. Yes, 50,000 USD is the minimum commitment value, which you pay over a 2-year period. So it's only roughly about 20% that you pay now, and this number can vary from fund to fund, but I'm talking about, in general, this is what it happens. So you pay a small money right now, and then over a period of time, you honor your commitment over a 2-year period. And that is how you invest. Now, when you give money to me for the first time, our typical period of investment that we will have in mind would be roughly about 5 years per investment. So the first money that you give to me, I will have in mind that I have to provide an exit out of this company, ideally speaking, within 5 years. The last amount that you will pay me, which will be after 2 years, I need to give 5 years for that investment as well. So typically, the tenure of this kind of fund would be 7 years. Right? First 2 years, gradually you pay money. The next 2 years, practically nothing happens. 4th year onwards, you will start getting exits as and when there are opportunities, and you start getting your cash flows out of the fund. This is how a fund will work. There is a similar construct that happens typically where you invest in what is known as a syndicate, where you take an independent individual company and invest in an individual company. So think about, if you are an equity broking house, there would be a research report which says you should buy ITC. And you buy ITC, it's like buying a stock. I will give you one idea of our startup and you invest. You build your own portfolio. That is one way of investing in startup. The other is you give money to me and I will manage as a fund. In the individual cases, the minimum could be as little as maybe 2.5 lakh rupees equivalent types. It could be as simple as this. It is up to you to decide how do you want to build your portfolio, but only one advice, which good that you are asking this question, therefore it comes to my mind. Never ever try investing in one startup and say, let's wait what happens. After 5 years, I'll decide whether I want to build a portfolio or not. For God's sake, invest in startup only if you are very clear that you want to invest in at least 15 startups. If that is not the number, then do not invest in startups.
Perfect. You have good kitty, good amount. Sir, you talked about India mushrooming, startups mushrooming from 4,000 to 200,000 almost. Now with chartered account, we can say that we will go bamboos. Strongest, fastest, and the largest. That is India's startup. My dear friends, give a round of applause to Mr. Apurva.
Can we have the chairman, vice chairman, Ashna, and our past chairman? I can see Anish Bhai is sitting. Anish Bhai, please come on the stage to felicitate us and share a token of love on behalf of all of us with Mr. Apurva. India is mushrooming, sir, and you did a fabulous job. Can I have a round of applause for Mr. Apurva for sharing what is startup doing in the space? Apurva sir just said that's a brilliant crowd, but brilliant crowd is not clapping for him. We should clap him if he says it's a brilliant crowd of ICI chartered accountants in Dubai. Finally, the last session of the day. And before we jump into the last session, it is our responsibility to acknowledge you and thank you for joining us today. It is also our responsibility to acknowledge our sponsors who always wholeheartedly support us in all our endeavors. And for this, let me invite our ExCom member Sanjay for vote of thanks to our members, speakers, sponsors, and our support partners. Can I have a round of applause for Sanjay, please?
Namaskar, salam, and good evening. Ladies and gentlemen, today I am filled with immense gratitude to express our heartfelt thanks to all those who have made contribution to making all our year's event resounding success that has contributed and resulted into winning a Best Chapter Award this year as well. I think we can give a round of applause to ourselves now. So on behalf of ICI Dubai chapter, first and foremost, I extend my sincere gratitude to our esteemed chief guest, Mr. Siddharth Balachandran, for gracing us with his presence and sharing his valuable insight. I also would like to extend our deepest gratitude to our keynote speaker, CM Motilal Oswal, his profound insight. We are not only the fastest, we are going to be biggest. His topic, Bharat Sone Ki Chidiya, I'm sure would have left permanent marks on all of us. A special thanks to Mr. Rami Musha for shedding light on his important aspect of financial planning, and we are grateful for his valuable information. I extend my sincere thanks to Mr. Apurva Jain for enlightening his speech on the opportunities for the CA in Indian ecosystem, startup ecosystem. You have provided food for the thought for aspiring professionals, and we are truly grateful for your presence here today. The last but not the least, our upcoming speaker, who is going to talk about the mantra of how to create the wealth. Now, let's not forget our amazing sponsor. So a special thanks to our title sponsor, Bricks and Boots. I think we can, now this time we should have a round of applause for each and every sponsor. तालियां बजनी चाहिए, चलती रहनी चाहिए. Principal sponsor, Stock and Ground, MBG Corporate Services UAE, Tele Solution, IFCO Ground, Lulu Group, AGMC, Motilal Oswal Financial Services, Olam Agri. Platinum sponsor, National Bond, Nadeem and Umendra Chartered Accountants, UHY James, SBC, HSBC, ASPA Consulting, and Amidst Chartered Accountant Group. Valuation partner, Bentsmill, Travel partner, Uranus, magazine partner, Finance World, media partner, Khalees Time, banking partner, Bank of Baroda, and institutional partner, Delhi Private School. Thank you all once again, making this event a roaring success. Dinner will be served after 8:30. So let's continue our bonding and discussion over a delicious dinner. From here to have an evening filled with learning, laughter, and of course, good food. Have a great evening. Thank you.
Thank you, Sanjay ji. Finally, the last session of the day, and a very thoughtful session. After hearing about equity, PMS, pension plans, startup ecosystems, all looks promising, and we stand at the same door thinking where to invest. When we started the event, we thought our understanding is limited. And after the session, we will arrive at the decision. But after 3 sessions, we all are thinking, we know it all, but where to invest? Kidhar chalu? Idhar chalu? Ya udhar chalu? To address all our questions and to help us to get this dilemma sorted, we have our next session where the topic is Art of Wealth Creation, Thought, Technique, and Temperament. The session will be addressed by our esteemed speaker, Mr. Gautam Shah, and therefore before he takes the stage, let me invite our ExCom member Dheeraj to introduce the speaker to all of us. Hopefully, after this session, we all will know Main Kidhar Chala. Can I have a round of applause for Dheeraj?
Good evening, all. We know we are waiting for a dinner, but I can promise this session will be very wealthy because we know how to create the wealth. To invite our next speaker, Mr. Gautam Shah. Mr. Gautam Shah is a founder of Goldilocks Premium Research. He is a well-known financial market veteran with over 2 decades of experience. Gautam and the Goldilocks Premium Research are the only Indian research firm to be awarded thrice continuously at the prestigious Global Technical Analysis Award declared in London. They were awarded at the Best Emerging Market Research, Best Specialty Research, and the Technical Analytical of the Year. Gautam Shah is also one of the few Indians to hold all 3 global certificates in the field of financial markets analysis. He is a chartered market technicals, certified financial technicians, and member society of the technical analysis, London MSTA, which decisions. He is a popular face of the virtual media, having done over 700 interviews with the business channels like CNBC Arabia, CNBC TV 100, CNBC Internationals. He's a known face, correct? There's a lot of things about him, but not taking much time. I welcome and to Mr. Gautam Shah. So please have a round of applause to welcome with him.
Good evening, everyone. Well, so between dinner, it's me, and I will ensure that every minute that I talk today is of value, and you take away something so that you can actually make money at the markets. You know, I think, firstly, Harikishan ji and the ICI Dubai chapter, thank you so much for this opportunity. It's great to be a part of this event. And I spend a lot of time in Dubai now, so I just, love the city, and I play the Indian markets, I trade the Indian markets, I invest in the Indian markets. So I think it's the best of both worlds. But I think everybody spoke about the India story. I think that's a no-brainer, right? Everybody knows that India is a story of the next decade. Some people even went ahead and said that India is a story of the next century. But then, in today's world, there is so much disruption. You have an environment where everybody seems to be fighting with everybody. COVID hit us 3 years back. It was a complete black swan event, and we saw a massive 30% fall in the markets. And ask an investor in March 2020, do you believe in the India story? So the point which I'm trying to make here is that there are structural trends and there are seasonal trends. And let's be practical about the world that we live in. There is just too much disruption. And I don't think you can look 10 years, in the future. I mean, all of you are CAs, so I had to actually do extra work in my presentation because I need to get everything right in what I say. Otherwise, somebody might just ask me a question, no, you're wrong about this. But I do believe that India is a story that has to be played structurally and seasonally. Because, if you want to play long term, you can simply do an SIP, sleep over it for the next 25 years, and your children will enjoy that money. But I think you want to enjoy that money, right? You just don't want your children and your grandchildren to enjoy the money. And that's why I believe that there are certain trends in the market which are for the next 3-5 years. Why just think only about 15 years? Why not think just about 2 to 3 years as well? Right? So given this backdrop, I'm going to share some slides today which will be a mix of fundamentals and technicals. And hopefully by the end of it, you will have some clarity as to what you should be doing at the markets. Since we have a shortage of time, please come to me if I'm getting a little carried away. So friends, I've been doing this for the last 20 years. I got into the industry when the Sensex was at 3,000. And today the Sensex is at 73,000. I see a lot of young guys in the markets who've come in the last 3 years. उनको लगता है कि उनको सब मालूम है. उन्होंने 2008 देखा ही नहीं. उन्होंने हर्षद मेहता देखा ही नहीं. उन्होंने केतन पारेख देखा ही नहीं. Right? So I have seen this entire journey in the last 20 years, and I'm very happy to have seen that journey. Because unless you have not seen 2008, you will not realize how bad things can get. Right? We've only seen the good side of things in the last 3 years. So I'm just using my experience to put out some pointers which I think will be of value add to you all. And I want to start by saying the world and financial markets have changed since the pandemic. Post-pandemic, everybody had the time. Suddenly, people who were scared of the markets saw the screen every day, and they realized, "Arey, market to अच्छी जगह है. यहाँ तो सच्ची में पैसे बनते हैं. Why am I getting concerned? Why I was scared over these years?" So a lot of people had the time, and therefore they started coming into the markets, and that was a big boon. In fact, COVID in some sense had a good side, and I think the good side was the financial market activity which started. Technical analysis is gaining prominence and respect as demand and supply has taken over. How much ever you talk long term, what is demand and supply? If there is more demand over supply, a stock or a market goes up. If there is more supply over demand, it goes down. What is this? you must be hearing this word every day on TV, liquidity. आपने सुना होगा हर कोई आजकल लिक्विडिटी के बारे में बात करता है. What is liquidity? Liquidity is more demand over supply, and therefore you need to understand where the liquidity is going. Is it going into India? Is it going into Reliance Industries? Is it going into HDFC Bank? Which I'm sure is a pain point for a lot of people in this room right now, and I will address that a little later in the presentation. So the key takeaway is liquidity is extremely important, and that's what you need to understand as an Indian market participant. The market is discounting a lot in the future. I have a lot of clients who are CAs. I have a lot of friends who are CAs. And they say that, I'm able to see the company over the next 4 quarters. The market tells them, I'm able to see the company over the next 10 quarters. That's the beauty about stock markets, because the market is so smart. When COVID came, nobody could have believed that the economy will come back on track. Nobody could have believed that the Nifty can go up from 7,500 to 15,000. But the market believed. So the market is discounting a lot in the future, and therefore you have to respect the voice of the market. How markets react to news has become more important than the news itself. Again, I have a lot of CA friends who tell me, देखना इसका results अच्छा आएगा, उसके बाद बाजार चलेगा या stock चलेगा. What have you actually seen? The results are great, and that day the stock is down 5%. So many of my friends ask me, "Arey, ye ho kya raha hai? What is happening? Why this happens? If the results is bad, the stock is up. The results are good, and the stock is down." Because the market has discounted well before time. And this is why you just can't go by fundamental analysis. You need to also understand technicals or what smart money is doing, which we do by way of technical analysis. Weak can get weaker and strong can get stronger till the point of disbelief. Very important point. When the COVID fall happened, I know a lot of people who are fighting the market. They said कि ये और नीचे नहीं जाएगा, हो गया. And it just kept falling and falling. And if you see the stock prices in March 2020, you'll be amazed at the kind of levels certain stocks were available at. और पिछले 2 सालों में क्या हुआ? The way stocks have gone up, so many people said that, okay, now it cannot go up higher because valuation is very stretched. But the stock kept going higher. The Nifty today, as we speak, is at 22,000, which not many people in the market could have imagined. Right? So please do not fight the market. Weak can get weaker, strong can get stronger, and just play the rally. That's how wealth creation is done. Social media, AI, and information overflow have evolved the markets. I keep giving this example. WhatsApp was not there when the last major crash happened in 2008. It was not there. Today, everything is, in one click. Half a second, and the news flow is out as to what's going to happen or what is the expectation of people. So post 2008, financial markets have evolved because social media and artificial intelligence and information overflow have taken over completely. The market is generally far ahead of the bad news and the good news. I just gave the example of COVID, that nobody thought that markets can actually recover, but you had that huge recovery over the last 2 years. And the final point, extremely important in this slide, the skill of riding a trend is more important than identifying a trend. I have had the pleasure of talking to many great celebrity investors, including the late Rakesh Jhunjhunwala. Everybody knows that that man was invested in a story like Titan. And he still holds that stock. But how many people in this room have the temperament to actually play a story over 15 years? I'm sure if I ask many people that you're getting 60% in 30 days, would you take it and be happy and move somewhere else? I'm sure 90% of the people will say, I'm more than happy here. हम लोग को business में इतना पैसा नहीं बनता है. So if you're getting this kind of money, so that's why it's not about identifying a trend, it's about riding a trend. Another example, I'm a big fan of coffee and a big fan of Starbucks. So when Starbucks came into India in 2012, I was pretty sure that this is a story I want to play. Because these guys are selling a Starbucks coffee of 350 rupees and are pretty much operating on a 90% margin. They're selling a brand. So I was pretty sure that this is going to balloon. And at that point, Starbucks was Tata Consumer, which is the company listed company. It was a 200 rupee stock, and today it is a 1,000 rupee stock. So you can have good coffee and also make money at the stock markets. Now, these are stories that you need to understand. I think Zomato, can today's India operate without Zomato and Uber? I don't think so. Because we are so used to, operating in an environment where at one click, your food is delivered home, and at one click, your car is waiting for you. So these are stories which you can play over the next, 5 to 10 years. And these are simple things that you need to do to understand markets. The next slide, again, is about the new world. So these are things which have actually happened in the last 5 years. We had the fastest bear market in history. I meet a lot of people with 40 years of experience. वो मुझे कहते हैं कि अरे मैंने तो सब देख लिया, right? I have seen everything. अब देखने को कुछ बचा नहीं है. उसके बाद COVID आया, right? And we had the fastest bear market in history where the Nifty fell 30% in 3 months. It's never happened. So the market teaches you every year. It always does something unique every single year. So sometimes experience is not enough to play the markets. Very important point, because you have to learn with everything that the market is trying to do. The longest bull market without a 10% correction. When we were at 7,500 on the Nifty, today we are at 22,000. I know a lot of people who said, ho gaya. We made enough money. Ab ye bazaar pagal ho gaya hai. Let's just get out. And those people missed the rally big time. Right? So the longest bull market without a 10% correction. Oil going negative. I'm sure everybody remembers. You had oil prices on the screen going negative, which we have never seen in our lifetime. So these are crazy things that the markets can do. The broader market outperformance, stocks and indices doing different things. Nifty is doing something else. Certain stocks are doing something else. The sad part is, if you look at the last 3 years, so many stocks in the market did well, and so many stocks in the market did not do well. So your portfolio has to be in the right stocks to actually make the most of the financial markets. And the final point, SIP, which is clearly the game changer. And let me show you a chart which will give you a perspective of things. This red line, as you can see, is the NSE 500 index, right? And this chart that you can see is the flow of SIP into the markets every single month and every single year. And today, as we speak, we are at 18,800 crores. Motilal ji and Mr. Siddharth, I think, did not really talk about this, so I thought I must, because they spoke most of what I was going to say. But this very important point, that we are not dependent on foreign money anymore. There are many people in this room who are very senior and who have seen markets over the last 30 years. There was a time when we used to say, what are the foreigners doing? F2 क्या कर रहा है? और वो जो कर रहा है, हम वही करेंगे. That was a very common thing that we used to always hear. Today, it's not important what the FIs are doing. In fact, in the last 1 year, FIs have been on the receiving side. They have been selling every single month. And the Indian investor is coming in and lapping all of it. When I got into the industry 20 years back, this is something which I dreamed of. मेरे को लगा कि कभी ना कभी तो ये होगा, that we are not dependent on foreign money. And now it's happening. And this 18,000 crores, I would not be surprised if it gradually moves to 25,000 crores, 30,000 crores. That's $2 billion of money every single month. Imagine the kind of money that we are talking about, right? And only 5% of India is investing in the equity markets right now. Just look at the dynamics of things, that if that 5% were to become 12, 15%, what's going to happen to the India story, right? So SIP is one side of the coin, which I think is very important because it brings stability, to the Indian markets. The other slide is the households have been deploying more savings in the shares in the last 5 years. Every single household has to decide that this year we have this much disposable income, where should I invest, right? And that number actually spiked post demonetization. So demonetization in some sense was a game changer because a lot more people started investing in the equity markets. And today that number is about 2 lakh crore of household money that's coming into the equity markets. Again, a game changer. The number of demat accounts, this is slightly older data. I just checked with my team, and this number is 14 crore demat accounts as we speak today. So we are at 10% demat accounts. If we are 140 crore population with 10% below the poverty line, as Sir highlighted, then this number is 14 crore, which is phenomenal. And there is a lot more room, obviously, on the upside, with this number. Now, see, data should be looked at in graphs because it gives you an idea where we were. We were at, 1.9 crore, and today we are at 14 crore demat accounts in India. And clearly a lot more room to go higher. What the two slides have done, the 2 pointers, what it has done, it has reduced volatility in the marketplace. What is the greatest fear for all of us in the room? That tomorrow Nifty will open 500 points lower, how will I handle it? That's your greatest fear. And that fear keeps you away from the stock markets, to be honest. You are not somebody who's looking at 25-year investment. Let's be honest here. You're not somebody who's looking at SIP on a daily basis. Your problem is, tomorrow if there is a big fall, what do I do? Look at the last 3 years. The largest correction the Nifty saw was 18%. And if I remove that, the other pointers were about 8%, 8%, 11%, and 7%. So these are very manageable corrections. And this is why the Indian investor today is very confident कि बाजार तो गिर ही नहीं सकता है. You must have heard this from a lot of people, particularly young guys who have not seen the past, that the market cannot fall. Because we haven't seen major dips in the last 3 years since COVID hit us. If I take you back to the 2003-2007 bull market, which I'm sure many people in this room have witnessed, in that period, we saw 30-35% down moves, which scared people. फिर वो लोग आए नहीं 5 साल. बाजार से इतना डर गए कि वो 5-6 साल आए ही नहीं. But now, the market is such that it's giving you great confidence that बाजार ठीक है गिरेगा, what will happen? It will fall 5-10% and it will come back strongly. India's performance versus the world, extremely critical because, as a fund manager, as a global fund manager, you have an option. You want to invest in India, you want to invest in Brazil, you want to invest in China, you want to invest in the US. These are the charts. This is what I call the ratio charts, where I'm dividing India by the rest of the world. And what you will see is this blue line has consistently moved higher. Can you see this blue line? So this is India versus the developed world, India versus emerging nations, and India versus the world. So the key takeaway is, in the last 3 years, we have not only done well on a standalone basis, but we have done very well on a relative basis with the world. What is CAT exam? CAT exam में जब आपका 98 percentile आता है, you don't see that it's a good score. You have to see how others have done. And then you decide where you stand. Markets are all about that. So India is one of the best performing markets in the world right now. Yes, we have our positives, but if we don't do well, money will not come into the Indian markets. So this again is a huge game changer with what has happened. Valuations. Now valuations is an area, I think all CAs here, so I think I can talk about it. We all look at markets on an absolute basis. I speak to a lot of people who say, अरे Sensex 73,000 हो गया, बहुत महंगा है. कहाँ महंगा है? 22 P पे हम हैं आज. We are at a 22.5 P at a 73,000 index because in the last 2 years, earnings have picked up with the market action. And if I use the data of the last 20 years, markets generally top out when the PE hits about 28.5. This has happened twice in the last 15 years. So at 22 times, we are not expensive. We are actually cheap. And that's the point which I think a lot of celebrity investors keep saying, that India is a great opportunity. And I'm giving you a complete perspective of things because we're talking about SIP, we're talking about valuations, and we're also talking about India versus the world. Right? So 22.5, extremely cheap. There is no reason to really fear about the markets. Bond yields versus equity market returns. So every household has discussed this over dinner. कि FD 7.5% में अच्छे बैंक में मिल रहा है, या तो उसमें डालें या फिर अपने इक्विटी मार्केट्स में डालें. Every household in this room, I'm sure, has discussed. Today, a good bank gives you a 7.5% FD. A not so great bank gives you a 8.5% FD. But despite such high FD numbers, Indian markets continue to rise because लोगों को market समझ में आ गया है कि this is how you can beat inflation. You can't beat inflation by investing in FDs. And that's the change which has happened. So look at this chart. What it is trying to say is, if Indian interest rates were to come off, and if 7.5% FD becomes 5%, there will be even more reason for Indian investors to park into equities and at debt. If you can't tempt them at 7.5%, 8% FD, you can't tempt them at 5.5%. So I think this is a great opportunity. Again, another side of things as to how markets can attract more money going forward from households. This chart I thought I must share because I keep getting so many queries from people. HDFC Bank ka kya kare? Right? Last 3 years, Indian markets have given you fabulous returns. It's done so well. See, I'm not here to judge a company. I'm here to help my clients and people who are listening to me today make money at the markets. Had you invested in an ICICI Bank in these last 3.5 years, or an SBI, you would have done far better. So the question is, do you really want to invest in the absolute solid company in the market, which as per your metrics has done everything perfectly, but market is not listening to it? So the chart on the above, the red line, is basically HDFC Bank divided by the Nifty, which we call a ratio chart. And when the ratio chart is going down, it means that the stock is underperforming the market. And I, as an advisor and as an investor, don't want to be in any stock where that red line is going down. I want to be in stocks where the red line is going up. And I've heard so many people say, ki, "Arey, 1 year has passed, chalo, ab to chalega, ab to chalega." And it's been 3 years, and you're still waiting that when this stock is going to deliver at the markets. Fundamentally, every quarter the stock is delivering. You know, it's a company which is such a big heavyweight on the Nifty and the Bank Nifty, but the stock market is not delivering. Can it deliver from here? The answer is yes, because at 1400, honestly, there is not much to lose. But are there better opportunities? The answer is yes as well. You know, I think SBI at a 9 PE is probably the far better, no recommendations here, but SBI at 9 PE is probably a far better opportunity than an HDFC Bank at current valuations. Just logic, just going by what's happening with logic. And SBI is under-owned. HDFC Bank is over-owned, over-analyzed, over-researched. Right? Everybody's holding HDFC Bank till here. There is not much scope. So please be in the right stocks and listen to the message of the market. Maybe this stock will do well over the next 5 years. It could prove me wrong, it could do well. As a technician, I will get into the bus when the bus is moving. When the bus is standing, I'm not wanting to push it to move. Right? I want to get in when it's moving. Now, another concept which I want to share with you, because today's presentation, you should have some takeaways. One big problem from a lot of people is, I bought REC or many stocks at a good price, but hum jaldi nikal gaye. Ab kya kare? Because you know, there are so many stocks which give you 200%, 300%. You made 40% and you got out. Is there something that you can do to ride trends? In technical analysis, we use a concept called the moving average. All of you are CAs, I'm sure you understand this concept of moving average. So till a moving average level does not break, you simply stay with this stock. And this is how we helped our clients stay in REC right from 100 rupees to 500, because in this entire period, not once was the red line breached. And you can do this with any stock. You can just, pull up your data and you can ride trends. Because there are certain mega trends which I will get later in the presentation, but this is how you can, stay with stocks for slightly longer term without getting bothered about day-to-day action. Why timing is important? I've been a big fan of the Taj brand. I just felt that Taj is synonymous to what India is today. And, since I stay in Calcutta, we used to visit the Taj Bengal in Calcutta. We used to love the food. We were happy paying 15,000, 20,000 a night. But the stock never moved, and it never moved for 15 years. This is the period. So in 2006, the stock was at 100 rupees. In 2022, the stock was at 100 rupees. Can you believe it? This is the Taj Group, Tata brand, doing so well. Then what happened? COVID happened. And people realized, अरे जिंदगी तो छोटी है. कितना जिएंगे? Let's make the most of it. People started holidaying, people started living their life, people started paying all kinds of money to in hotels. I mean, in Dubai, though, it's even more crazy because there are 4 Taj hotels. But I just realized that this is a great opportunity. If I want to play the India story, I want to play Titan, I want to play Tata Motors, I want to play, Indian hotels. And I do believe that even from current levels, why can't a stock like Indian hotels become a 1,000 rupee stock? I mean, we did recommend it to our clients. I'm just giving you a logic. This is not a recommendation. How do you understand? How do you pick big winners? You pick winners by thinking about Zomato, thinking about Starbucks, thinking about Indian hotels. That you want to play these stories. And thereafter, as a technician, I feel very proud that we caught it at the right time. And then at 150, today we are at the doors of 600 rupees on Indian hotels, right? There are many such stories that will come your way. You have to use logic. And the good thing about all of you in the room, you guys can look at numbers, and you guys can also think and use logic. And believe me, you're far better off than that average investor on the street who's very confused about markets on a day-to-day basis. Skip this, I'll skip this. Let's move to the opportunities, because we have the shortage of time, so I'll just quickly move to the opportunities. And I just want to share with you 3 or 4 opportunities, because I have spoken a lot about the past. Now you might say, "Arey, aage ka bataiye thoda sa." So keeping that in mind, I think from a near-term and medium-term perspective, I think Reliance is probably the opportunity of the next couple of years. It's a stock which has done nothing over the last 2.5 years. This blue line that you can see is basically a ratio chart of Reliance divided by HDFC Bank and Reliance divided by the Nifty. And that blue line has started to pick up after almost 3 years. And it's Reliance after all. You can't keep it down, you can't keep it in hibernation for a very long period of time. So given a choice between HDFC Bank and Reliance, I would probably invest in Reliance. And I think, again, not a recommendation, observation that Reliance and the group companies could probably be the opportunity of the next couple of years. The data is saying, I'm not saying based on my, just biasness. There is no biasness here. It is purely based on data. Gold. I think gold is going to be the opportunity of the next couple of years. You know what? This is a chart of the last 50 to 70 years. And if you study this chart, whenever the Fed has cut rates, this is the period when the Fed rates was cut and interest rates were down, gold had a 66% move, 189% move, and a 50% move. Pure data. This is the last 50 to 70 years that whenever rates are lower, people generally move towards gold and it does well. And today as we speak, there are indications that the Fed is going to either cut rates next month, unlikely, maybe May, but definitely June. And if that happens, I think gold at $2,000 could really be an opportunity. In fact, I've been on TV where I've said that gold could actually beat Nifty returns over the next 2 years. Because a 2,000 can become a 3,000. I don't think anybody is giving you that perspective. It's a crazy perspective right now. I think it's possible. But to see a Nifty 22,000 at a 30,000 is going to be very difficult. It's going to be challenging. So in your investment portfolio, gold should be a very large part. It could even be a 10, 12, 15% of your portfolio size over the next 3 years. The banking sector. Now, please understand, everybody is talking about banking. What is the PE of the Bank Nifty? Has anybody even thought of it? We are at a PE of 15 on the Bank Nifty today. 15. This is a median PE if you look at the last 20 years. I'm giving you data right from 2000. in the last 20 years, whenever the P of the bank nifty is around 15, it's been a great opportunity. So on an overall basis, don't look at stock prices based on just prices. Based on valuation, I think banks are at an inflection point, and the chances of the banking sector reviving, and if you have to play the India story, and if the India story has to play out, banks have to do well. So all your top banks are pretty much an opportunity for the next 2 to 3 years. Final 2 slides here. The IT sector, without getting into the details, I think it's a great opportunity because again, this red line seems to be turning up once again. Top line IT has already done very well. I'm a big bull on Infosys, TCS, Wipro, HCL Tech. I think they'll all do well. Mid-cap companies also doing well. The only joker in the pack is AI. Because this is what I get from a lot of people. Will AI come and disrupt the performance or the sales or the revenue of Indian companies? It is possible. That's a risk that we have. But on an overall basis, I think IT as a sector, I think is likely to do well. And the final opportunity that I see is pharmaceutical. It's been a great story in the last 1.5 years. Look at stocks like Cipla, Dr. Reddy's, Sun Pharma. After being in a downtrend for 3 years, they've all come back very strongly. And I see it as a structural story over the next couple of years. Again, they are cheap. They are super solid fundamentally. The only problem is it's very difficult to understand these companies because there's so much happening. Tomorrow, the US FDA does something overnight, you have a 10% fall. That's the only risk. But I see pharma as a big opportunity for the next couple of years. And my final opportunity slide is metals. Now, I know many people here obviously audit a lot of reports, audit a lot of companies which are into metals. Please go around and see what's really happening in the sector because I do believe that metals could be an opportunity of the next couple of years. So stocks like Nalco, SAIL, Tata Steel, JSW Steel, and I've had the pleasure of speaking to many of these managements, and I believe on the ground everything is pretty good. There is the China factor. There are global headwinds that could disrupt. But if you are thinking slightly longer term, I think metals could be the next big opportunity. And within the metal space, I think PSU metals make a lot of sense. So I think SAIL probably makes a lot of sense from a longer term perspective. Cheap, great earnings, government thinking lot many things probably in the next couple of years. Looks like an opportunity. Okay, final slide. A lot of people are invested in mutual funds, so they keep asking me, okay, what do I do in mutual funds? Should I go small cap? I see a lot of people doing small cap investing at these levels. The answer is please do not do that. Because small caps have gone crazy right now. They've gone parabolic. These are not levels for aggressive investing in small caps. You should go the multi-cap way. The P of the multi-cap index right now is 24. 24 is the P of the multi-cap index. So this is the way to play mutual funds if you have a 2 to 3 year horizon and you want to not do direct equities and do more mutual funds. So to conclude, friends, the market dynamics are ever changing. Please listen to the market. It will tell you something every single day, every single week. There is a lot of noise, so please be careful about that. Look to capture bigger trends over weeks and months. Please don't be in the camp ki 10 baje lenge aur 12 baje bechenge. I have met a lot of people. Nobody has created wealth doing that. Nobody, believe me, because it's a zero-sum game at the end of the day. At the same time, don't be in the camp of buying today and selling after 15 years. The Warren Buffett style of investing. It can work, but today's world, there is too much disruption. As I said, geopolitics is such a huge trigger when everybody is fighting with everybody. Anything can happen at any point of time. That's the real world that we live in, and it's a risk that we are carrying. Noise is the biggest hindrance in today's market. Please watch less of business TV. Believe me, that's really going to help you. Since I spend a lot of my time in Dubai, I've just stopped watching TV, business TV. I come on TV maybe once a month or twice a month. But if you stop watching business TV, believe me, immediately you will have a uptick in your portfolio. And I have seen this as a practical example from a lot of people at the markets. Because their job is to basically, sell you fear and sell you greed. And I have done 700 TV interviews in the last 20 years, so I can say with experience as to what's really happened. Look for relative strength. As I said, don't be in stocks that don't move when the market moves. Bazaar chal raha hai, aapka stock chal raha hai, very good. बाजार चल रहा है, आपका स्टॉक नहीं चल रहा है, क्वेश्चन इट एंड स्टे अवे फ्रॉम दैट. सेग्रीगेट ट्रेडिंग एंड इन्वेस्टिंग कैपिटल. शॉर्ट टर्म को लॉन्ग टर्म मत बनाइए, लॉन्ग टर्म को शॉर्ट टर्म मत बनाइए. कॉमन प्रॉब्लम pretty much in the whole of India that, we make short term long term and long term short term. Ride the winners, cut short the losers. That's how serious investors, people who were on the dais, an hour back, that's how they have made money. As they said, you buy right and sit tight, but don't forget to review every 3 months. Because if you just keep sitting without understanding the local and the global environment, it can get very challenging. So this is what, you can contact me here. That's my mail ID. This is the website of my company, which we run. We are an investment advisory firm spread across pretty much 16 clients across 16 countries. I'm on Twitter, putting out all of this content from time to time. We have a YouTube channel as well. And this is my number in case you want to get in touch for anything. So with this, I end my presentation today. Thank you so much, and I hope you enjoy the film.
Mr. Gautam Sa, you lived up to your name. I heard about Gautam Buddha. Today you enlightened us on the equity. Thank you very much. You talked about 7 opportunities. You are like that rainbow which came and educated all the chartered accountants. A big round of applause for Gautam Sa. Superb, sir. We loved it. Everyone was sitting for you and having it. Can I have the chairman, vice chairman, our former chairman Anurag here on the stage, and along with Sanjay ji, to felicitate our speaker, Gautam Sa, the Gautam Buddha of the equity.